think we're back. I'm gonna double check, make sure we're live. Are we live? Tarpinian Productions. So, if YouTube doesn't work, you can check Rumble, Twitch, Odyssey, because those are more reliable. YouTube, not so much. Yep, it's live. Great. Do we have a chat? There's this. See, I hate that I have to do this. I gotta manually do this every time. I hate it so much. Pop out. Copy. So when I go here and put the chat, it says, normally says it's disabled. Yep. So go to custom browser docs, do this, paste, apply, close. So a lot of setup I gotta do. Oh, we got 3 viewers. Nice. Okay, chat's working now, so I can see what you guys say. And I have some buying power. I want to pick up some service now, and we're gonna do that. I'm gonna do it together. Oh man, see, it hit that fair value gap, that volume weighted average. That line is called a VWAP. We just hit it. I was about to buy puts. I had a feeling it would get rejected, but it did get rejected. It fell back down. It's gonna climb up and try to hit it again, and we are gonna scalp it. We're gonna buy a call right there. Oh man, right as I buy it, it shot up. Okay, we executed, and we're gonna see if we can go back up and hit that line, and that'll give us a few bucks on the way up. And oh no, it's dropping more. Oh no, no. See my luck? Right as I pick it up, it dumps. Oh my god. Hey, you know what? I'm just gonna get more. If it hits, I don't think it's gonna go less than this. See, I'm gonna indicate that line right there. Okay, and I think we are in a zone. Like this right here has become a sort of ping pong zone where it's just gonna bounce up and down. So I'm not worried, but we did just lose like 12 bucks right out the gate. I have $67. Let's go ahead and pick up another one, cause why not? Got nothing else going on, right? Might as well. We lose, we lose. You ain't a boss till you take a loss. And we're used to doing that, so we got 2 of these, and we're just trying to get it to climb back up, and it is. It's gonna come back up and try to kiss this VWAP, and we'll cash out because it'll probably get rejected again. So what you see up top is times 2. So we have negative $20, and it's coming back up. Oh, Spoke too soon. It's fine. Hey, I'm just having fun. I'm not trying to get rich here. And I'm trying to learn how to predict, try to figure out price movement and market structure. See, we saw it do this, and it's safe to assume. See, it's already going up. We're not trying to, hit it big. We're just trying to pick up this little space here when it climbs back up, and then we out. It's gonna take a minute because there's not a whole lot of volume. Oh no, oh no, oh no. I should have probably waited for it to come hit this level first and then bought it. But, just wanted to have some skin in the game. I don't like to just stare at a chart and wait. I want to have some skin in the game. But that's my problem. I just want some action. I get impulsive with it, and then this happens. I should have just kicked back for a minute or looked at something else. What else could I have done? Let's see Hood. What's Hood up to? Probably going down. Robinhood sucks. This platform, yep, just like I expected. Going to the pooper. Should have gotten puts on Hood instead of calls on now. Is my mic on? See if my mic is on. Check. Yep. Oh, look at that. It's popping off. Okay. We are in the green. I think it'll pan out. I think it might even crack the VWAP. We shall see. It'll probably do like an upwards consolidation. I don't know if it'll crack the VWAP. It'll get close though, and we can cash out when it does. We are in the green though. There it is. I feel like we're going to crack that VWAP. There is a lot of momentum. Okay, next time it hits, I'm going to take it. That's no fun. We're gonna. Oh god. I'm gonna let this marinate. I have a feeling. I have a good feeling. Actually, I don't know. I mean, we did have a big pump in the morning. Let's see. Where's our 15-minute high and low? So this is how we started the morning, and then 15 minutes in, we are up here. A pair. So that's our range for the morning. I can technically pull out now with $24 profit. We did create a lower high. I think we can go a little higher. We made a higher low also, so that's a good sign. Oh, look at that. $40 in the profit. Let's sell one. Why don't we sell one? Close. Oh, wow. Look at that. Okay, we're about to hit that VWAP, so. So one. At how much? How much are we at now? 74. Oh, it went back down. Oh, I'll try to get 75 for it. Oh, no. So close. See, we just hit that and dipped. That's a shame. Oh, God, man. So close. See that? What a tease. I'm going to let it sit. Okay. It's looking fairly bearish now, but you know, it's going to come up and try and reach for that VWAP again. Just as expected. I don't know if again. We'll see. We shall see. Is it going to make a new low? Hope not. Hope not. Yep, there it is. There it is. Man, there's no winning. There's absolutely no winning. Sucks. Just giving all my money away. Crazy. And now we wait to hopefully get it back. I keep telling myself that I'm just going to do puts from now on, no more calls. And I still end up doing calls because I'm just optimistic about the future. And I don't want to change. I want to be hopeful for the future. Look, what I notice here is that it keeps trying to go down, but we keep pushing up. Keep figuring out a way to push ourselves back up. Story of our lives. See that? We just had a big push down, and now we're itching to climb back up. And we didn't crack this low. Let's mark that low here. This is a significant low that we do not want to crack. This sucks. A lot of pressure coming down. Okay, when it hits this level, it better, about to say, better bounce back. I think it will. I think that's the bottom. Okay, now we're on the train back up. I gotta learn how to use the Fibonacci. Where's that Fibonacci? Let's see, what is there Fibonacci on Robin Hood Legend? Yes, they're located in the drawing tools menu on your chart widget rather than the standard indicators tab. Fibonacci retracement. Drawing tools, huh? You guys want to learn it together?
In today's video, I will walk you through how to add Fibonacci retracement in Robin Hood Legend. In this tutorial, you will learn how to locate the Fibonacci retracement tool and add it directly to your chart. Then adjust its settings to match your preferences. First, go to Robin Hood Legend. Once you're on the platform, move your attention to the top center area of the screen where the main tool icons are displayed. In this section, look for the Fibonacci retracement icon among the available chart tools. Take your time to locate it as it will be grouped with other drawing and analysis tools. Once you find the Fibonacci retracement icon, click on it. After clicking, choose where you want to position it on the chart. Once selected, the tool will be added directly to your chart and the Fibonacci levels will appear. Move to the chart area where the levels are now visible. From here, you can adjust how the tool appears and behaves on your chart. Next, locate the settings option for the Fibonacci retracement tool and click on settings to open the customization panel. Inside the settings menu, you will be able to adjust the appearance and configuration of the Fibonacci levels. This includes modifying how the tool is displayed on your chart. Make any changes you need within the settings panel to match your preferred setup. Once you are finished, close the settings panel to return to the main chart view. The Fibonacci retracement tool will remain active on your chart with the updated settings applied. You can continue working within Robin Hood Legend while the tool stays visible on your chart. That is how you add Fibonacci retracement in Robin Hood Legend, place it on your chart, and customize it using the settings menu.
You guys see that? I learned it so fast. So,
are you too busy today?
Looks like what this does is it kind of helps you figure out price action. And you kind of know when it'll reverse. So this is climbing to crack this level. It's probably going to come up here now. I don't think it's going to keep dumping. There it is. So when it gets in this level, it's probably going to hit this level next. See? And if it cracks this level, it's going to go in this area next. really should have waited to get here before I bought in, but it's fine. We are on our way back up. Oh no. Oh no. No, I think we hit a support. And it doesn't want to dip lower than this support. It got rejected here, but it also got rejected here. So I'm just hopeful. I want to be hopeful. Can we just be hopeful? And yeah, I do see all these big red candles, but I'm just hopeful. I'm rooting for the underdog.
fast little thrill. I let the setup speak, then I move with skill. Stick to the plan, stick to the plan. Don't let the fear take your hand. Stick to the plan, stick to the plan. Don't let greed make a man. Stick to the plan, stick to the plan. Stay calm when the candles burn. Stick to the plan, stick to the plan. When slow, that's how I win. I seen the crowd buy high, panic low, chasing the noise and the afterglow. I take my loss, then I take the lesson. I don't confuse luck with the real life blessing. I'm confident, yeah, but I stay aware. The market humbles anyone, anywhere. So I cut my wrist, then I let it ride. No ego drive in when I step inside. Trade my peace for a fast little thrill. I let the setup speak, then I move with skill. Stick to the plan, stick to the plan. Don't let the fear take your hand. Stick to the plan, stick to the plan. Don't let greed make a man. Stick to the plan, stick to the plan. Stay calm when the candles burn. Stick to the plan, stick to the plan. When slow, that's how I win. my screen goes red again. Before my coffee's cold, I bought the dip last week, now the dip bought my soul. Charts keep chewing me up like a rat in the trap. 1 minute I'm up, then I'm under the map. Ticker tape lies, smiling through the pain. Every little rally ends in the same rain. I hate the market, it sucks. I hate the market, it sucks. It takes my money, then it mocks. I hate the market, it sucks. Some suit says hold on, like that's some kind of cure. I'm staring at my losses and my nerves are worn and pure. My savings got bruised, my trust got sold. Every green little candle turns to dust and gold. One more headline, one more fake out swing. Everybody's rich till the bell starts ringing. I hate the market, it sucks. I hate the market, it sucks. It takes my money, then it mocks. I hate the market, it sucks. I wanted rent, not roulette. I wanted sleep, not sweat. I wanted one clean win. I ain't found it yet. So burn that hopeful talk and your shiny little luck. I'm done with the game, I'm sick of the market stuff. I hate the market, it sucks. I hate the market, it sucks. It takes my money, then it mocks. I hate the market, it sucks. Same trash numbers, same bad jokes, same old game, and I can't cope. I hate the market, it sucks. And Tarpinian, Tarpinian, blessed by the Lord. Tarpinian, Tarpinian, can't count what he's got. Money in the morning, hey, hey, hey. Love at every door. Tarpinian, Tarpinian, blessed by the Lord. Born and raised in the belly of the beast, Hollywood, Babylon. Now out in the deserts of Los Angeles, in the middle of nowhere with no one around. Love's a legend with goats, chickens, horses, and cows. They often ask what he does, how he does it, and how he knows so much. The mystery remains as he gives all glory to God. Oh, he never brags too loud, he just tips his hat. They try and call him lucky, but it's more than that. It's Tarpinian, Tarpinian, blessed by the Lord. Tarpinian, Tarpinian, can't count what he's got. Money in the morning, love at every door. Tarpinian, Tarpinian. his head and that. And Tarpinian, Tarpinian, blessed by the Lord. Tarpinian, Tarpinian, can't count what he's got. Money in the morning, love at every door. Tarpinian, Tarpinian, blessed by the Lord. In a hard old world, he kept his name clean with the dust on his boots and a grateful grin. If you ask him why, point up high, say I didn't make this, I just survived.
It's interesting how the Fibonacci tool is so accurate. I just laid out this line on the trend and look how it hit that point and it went down. Look how it just hit that level and bounced off. And now down here, it also got to that level and tripped out. I've been wanting to learn how to use this tool. You just lay out the trend and it kind of tells you the price points where it's gonna matter. Now we're looking at this, trying to come back and hit this and bounce back up. But maybe I'm not using it totally right. Maybe I need to do this. I'm still figuring it out. I'm going to take a class on using the Fibonacci. So here's a trend. And here's where we're at. And when we get closer, I don't know, I'm still figuring out how this works. I think the whole thing needs to be centered. Let's see, let's do this from the top of the morning. Top of the morning to where we're at now. Yeah, my computer's lagging. It's fine. I'm just waiting for this to get closer to that VWAP so I can sell it. But it's struggling. I forget today's Friday. Friday's sell-off day. All the contracts are expiring. So it's kind of silly to go bullish. But we shall see. Probably towards the end of the day it'll kick off. But we are stuck in this level. Alright. BRB. Put up the jams.
And you helped me go.
I hope to come back and see some money.
For me when I couldn't reach back. You covered my shame and got me on track. You pulled me out. You pulled me out. I'm standing now with my head held high. You pulled me out. You pulled me out. profits in my hands. I was chasing fast winds like they owed me more. Then one hard stop came and I hit the floor. But mercy found me there, right where I broke down. You turned that loss around, and I praise you now. You reached for me when I couldn't reach back. You covered my shame and got me on track. You pulled me out. You pulled me out. Pulled me out. I'm standing now with my head held high. You pulled me out. You pulled me out. Ended the day strong with profits in my hands. Not luck, not pride, not my own two hands. Grace was the rescue, grace made the stand. I give you the glory, I give you the praise. You stayed with me all through the waves. You pulled me out, you pulled me out. I'm standing now with my head held high.
Moving real slow.
You pulled me out.
It's moving real slow, but it's fine. It's going upward. We created a higher low. It's looking fine. Seeing some big green candles. They're in good shape. As long as we can stay above that morning low, we'll be alright. Trying to figure out my plumbing. Thank you guys for watching. I hope you guys get to see a redemption story. It is retracing. I just keep thinking things are gonna go up, but in reality, and I don't want to attitude. Gotta check what's going on. you think it's hitting some type of reversal? I'm not sure. I don't want to pull out just yet. We'll see. We'll see. I don't want to change positions just yet. Okay, we're getting rejected by that morning low. So that's cool. I want to stay above that blue line. But, oh no. See, it keeps spitting it back because it doesn't want to go under that blue line. How's that? It's fine. It's fine. Oh no. That's not a good sign. I think maybe it's time to get out of this trade. It's not panning out. It is struggling to go underneath that morning low. So, yep, yeah, that's a good sign. It's a good sign. Doo-dee-doo. I like this song. It's encouraging. It's encouraging to keep losing. Oh God. About to dip. Did we get rejected by that VWAP? I don't know why I got back on the call train. It's a good learning lesson. Sometimes it tests it and then goes back and takes off. It's kind of a fine. Okay, watch. Remember last time it hit this level? It did that. Okay. Come on. Let's go. What are the alerts saying? People sending me stuff. Let's see what the Discord is saying. Saying calls. Puts on hood too late. That's at 11:22. What time is it? Oh, it was yesterday. Was it? No, that's today. Oh, 11:22 Eastern time. It's at 8:16. $8:22. Do you take a loss? So at 8:22, the guy said puts on hood. I didn't see it, but that would have made sense. I actually should have done that instead of messing with now. But oh, look at that. Hood's climbing. But probably a good time to buy puts on hood once you see it reversing. How much are puts on hood? 56. Crashing it. Is it hitting some resistance? So it looks like right here is a level for hood. A level of significance. Here also. I might get out of now and go into hood. Okay, now it's popping off. There you go. Okay. Okay. You think we'll hit this level? Trying to get up here. See, sometimes you gotta let it marinate. I want to see fast movements, but you know, you gotta chill sometimes and let it do its thing. I just want to see it pop off quick. And it did. Look at this. Two big green. Oh no. Oh no. Oh no. Yeah, not down. Let me go back to hood. See how hood's doing. It's probably dumping. Oh no, look at that. When it hits this level, I'll go puts. So we made a higher low here, although there's been lower highs all day. Beautiful. Nice pop there. That's what I want to see, really. That's what I want to see. Really. But we got a ways to go to get us out of this negative. Down 30 bucks. Want to see it get back in the green. That was such a tease. Don't you hate that? Okay. Think we'll revisit this space here. Come on, man. No, I think it's a dead fish. Maybe not. I don't know. I'm still keeping an eye out for hood. Oh, see, it's about to reverse down, and puts are $58. There it is. How did it? Okay. Okay, we got that, and it is somewhat dumping. I hope. I mean, this could have been a bad move because normally when it revisits the morning and then retests, it goes higher. I forgot about that. But this was way too bullish for a Friday. And that's why I think this is a level of reversal. We shall see. I'm going to let that marinate and check on now. Oh, I went back down. See, it just teased real quick. And now it's doing a squeeze. It did a tease and now it's doing a squeeze where it goes like pop, 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 pop. And it just is going to like come to a consolidation point. And we'll see what happens after. I might just pull out and put all of it into hood. Oh no, hood's going up. This was a bad move. This is the level where if it passes this, we are in bad shape. And we are in bad shape. Look at that. Would you look at that? That was a silly move to get puts going against the trend. Should have waited a little bit. Alright, we tried. We out. What pumped hood? Something pumped hood. I think it will come back down, but not anytime soon. Maybe soon. Maybe we see a big fat red candle like that trying to form. There it is. See, it was just trying to collect people's stop losses. And now it's dumping. Yeah, I think we're alright. We'll be alright. See a dump. Nice. Gonna revisit that VWAP. And now it's going up too, looks like. Oh, look at that. Oh, nice. We made a new high. Yep. We are in good shape. So we made higher lows and now we made a higher high. So it's looking fairly bullish. Some nice big fat green candles. I want to see it do another pop. Let's see another pop. I'm just excited to see if we're going to crack this VWAP. If we're going to go above it. Because once it cracks this, it's going to go to the moon. And that's what we're anticipating. Let's see how Hood is doing. Okay, it went back down. So pretty much even. We are pretty much even Steven at the moment. Just $2 down. Let's see if it pans out. We want to see this hit the VWAP too now. We're so far away from it. So the reason I got puts is that it makes sense to be at this level. So we want to see it come back down and make sense. That's where we're anticipating. This next candle can make or break this play. It looks like it's pumping down. There's not a lot of volume. Let's see how SPY's doing. It'll give us an idea of how the market's flowing. But, you know, for Friday, probably bearish. Pretty sure it's going downward. You know, a lot of people, yep, a lot of people just do SPY. They don't even mess with. Look at it, try to reach for that VWAP. But it is at this significant level of reversal. So it looks like the entire market is at a point where it's trying to decide where it wants to go. And there's not a lot of people active. It's just going sideways. Oh, now it went up. Now it's going up. I could tell from the number here. We are looking good. Reaching for that VWAP. It's the volume weighted average price. Okay, it's not something else. It's not about moisture in your pants. Congratulations. 8. check back with hood. Are we in the green? Nope. We're just hovering at the same spot. Does look like we hit a reversal point. I think it will start going down from here, because the trend is downward, and this would just follow the trend. Yep, we are in the green. So this might actually pan out, hopefully. And this now went down. It's fine, it's fine, it's fine. We're not tripping. We ain't tripping. It's overall bullish. What's the trend on this? No bueno. I don't know, it's up in the air. Up in the air. Oh man. Hood is messing me up. It's doing so good. So I'm trying to get hood to go down and now to go up. Okay. Okay. Gonna go up. Or no. Yeah, nothing's panning out. Okay. It's a nice pump. Oh no. I don't want to see that. Yep. Let's see it go down. We're trying to get hood to go down and now to go up. See, we hit this level here, but are we gonna revisit? Looks like it. See, hood is on a mission to rise. I don't like it. I don't like it one bit. Not right now. Not on a Friday. Not on a Friday. I gotta journal these things. I made an Excel sheet. I programmed the reversal points and the time and the day, so I can check back and see what happened. Like today, if it's the third Friday or second Friday, I'll go back and see what happened second Friday at this time. But it doesn't really. There's not really a pattern, sort of, kind of. Could be coincidental. Oh, now it's doing good. Nope. Sort of, kind of. So he's doing that squeeze where it just shrinks. And I can try and speculate where it's going by doing this and this. If it tries to crack this, it's a good sign. Yep, it's a great sign. We're inching closer to that VWAP. See how that became a level where, like a resistance level? It's pumping. It is quite pumping. Let's go back to hood. Hopefully we see some green. Not yet, not quite. But it's not going up like it was. I think we're going to sit here for the rest of the day for quite some time. Okay, now it's doing great. Now it's doing superb. We're getting close to that break even. Might even crush it further. Really, we might actually crack the VWAP and keep pushing forward. Well, the move here would be to cash out, knowing that it's been so slow and so weak. But we are here. We are here. We're gonna play. So it is at a critical level here where it could get rejected by the VWAP or crack it and push forward. And you know what? Same with hood. It is at a critical level here where if it cracks this previous high, it'll keep moving up. But the VWAP's way down here, so obviously that would make sense for it to come back down. See, this is where all the action happened. And we want to get back in that action. Yep. There it is. Pump it. Come on, a little more, a little more. Yep. A little more. A little more. I don't like it. But you know, upward consolidation, downward momentum. So we're going to watch it closely. Ugh. Back to now. Nope, it dipped. We were close. I think we'll get there. We see there's a trend forming. We got higher highs, higher lows. Oh no. See that? Getting some pushback from up top. We'll get there. We'll get there. I think. Fermi is up. What do I do? Do I sell this? Or let it ride? Let's hood up too. I think it cracked that level. Nope, not yet. It's going down. Yeah, see, it found a support and it's just hanging out. But at some point, it's hard to say. Normally, when this happens, it goes its direction it was climbing up. We'll see. We shall see. Okay. See, it went down, but it didn't go lower than this level I indicated. Oh, yeah. And is it gonna go lower than that? Doubt it. Doubt it. Uh-oh. Should have cashed out. God. It's not a good sign. Still, it's a higher low than this. But it is getting rejected by that VWAP pretty heavy. Let's look at Hood. Hood still living up there. Living La Vida Loca. I hate when this is the most annoying when it just levels out and goes sideways. Alright. Okay. Okay, we're still in the game. We're still right here. Made its way back up. It's a good sign. It's climbing. But will it hit the VWAP? Let's look at a hood. Still here, but it did crack that level. It's concerning, sort of. But we are still right here, still in the game. Look at that, it's actually pumping. I get so surprised when it actually starts going in my favor. It's like, huh. It could work. Like, this could pan out. Huh. Who has a pool I can go swimming? I'm gonna go swimming in my pool right after market closes. Right after this. Oh no, I gotta be here tomorrow. Ugh. There. Let's getting there. Man, I just wish I bought it here. If I was just a little more patient and I waited for it to hit this level, this would have all been profit. And even this, you know, but realistically, 65% chance it's not gonna crack the VWAP. It's gonna come hit this and reject. This is a good time to pull out. You know what? We're here. We're queer. We're gonna steer this ship into the ice and hope we break through the ice. See, the goal isn't to avoid the ice, it's to break through. Oh, yes, here we go. We did it. We broke through the ice wall. We're on the other side. Truman has discovered the truth, and it set him free. Or did it? Or did it put him into deeper bondage now? And now, oh, who knows? We're gonna let it ride. Look, how is this in the negative? How is it negative $2 when we just broke through the ice wall? Don't make sense. It's rigged. The market's rigged. We are crushing now. Let's see Hood. Is Hood in the green? Nope. Oh no. Hood's doing too good for its own good. And it broke out. Will it revisit that bottom? It's so far from the VWAP. Oh. Alright, we out. Let's get our $10. I bet Spy is doing good too. Yeah, I was gonna pull out a Hood, but I think it's at this level here. It's where this happened, and then it dipped. And that's what's happening. It's falling back. And it could fall heavy. We'll see. I'm gonna check out Spy. I'm gonna check out now. So that's cool. That's great. That's a good sign. I still want to get out of it though. I still want to get out of it. It's dangerous. Look at that. Oh my god. Come on, man. After you crack the VWAP, you're supposed to fly. None of this. None of that. Come on, guy. So annoying. Hood is dropping, which is great. Okay, cool.
Broker boys in clean white shoes sell you smoke, then sell you news. Red or green, they move the pin, make the game, then call it win. Charts go up, then hit the floor. They want panic, then they want more. Fake and gay, fake and gay. They sell the dream, then take your pay. Fake and gay, fake and gay. Paper hands and a rigged up day. Tick by tick, they pump the crowd. Siling hands in the trading cloud. Little guy gets the lassie ride. Halo sold. Every tale comes wrapped in gold. Fake and gay, fake and gay. They sell the dream, then take your pay. Fake and gay, fake and gay. Paper hands and a rigged up day. Margin calls and hollow cheers. They eat the panic, count the years. If it's a game, then call it plain. I still see through the pretty chain. Fake and gay, fake and gay. They sell the dream, then take your pay. Fake and gay, fake
Market is teetering today between a red and green doji. If you look at the SPY, you can see that price is right beneath the 60 RSI, but above the moving average RSI. And we are getting to a place where there's going to be a very strong move, gonna break out or break down very, very soon. It's a breakout if we can close a candle above 755. It's a breakdown if we close a candle beneath 745. So we're in a very tight range, but we are definitely in the camp of the bulls, even though not everything is going up right now. MU has had a huge flush. Today, it hit the target that I gave quite a while ago, down to 861. It went lower. I'm going to analyze that for you today. I'm also going to talk to you about why Apple is leading the Mag 7 pack and why NVIDIA, the king of the AI story, is been lagging. Both of these recently bounced off of their golden pocket level on the Fibonacci. I'm going to show that to you guys today. Why am I showing you the golden pocket fib level? I'm going to be teaching a class on the Fibonacci this Saturday with Trading with Ashley. I'm going to break down all the mechanics, how to draw the lines, how to chart them, and what they mean. And Ashley's going to be talking about long-term investment trading using skips and leaps based on finding the right levels. There's a link for you to secure your spot in the chip stocks like NVIDIA, and they're buying more defensive cash flow heavy stocks like Apple. Let me take you guys into the Apple chart, and I'm going to show you where I expect it to be going based on the fib levels that I'm going to be talking about this Saturday. So I've got the daily time frame drawn on the chart. We've got an impulse move from 245. It ran all the way up to 317. Then we fell under the 9 and we began to have a pretty good pullback. Where did it bounce? Well, it bounced on the golden pocket. This is what I want to teach you guys, is this is where Wall Street was camping out, because if it got down here, this is where they were going to buy it to run it back up. Now, it ran all the way back up to the top of the range, but how do we know where it's going to go after that? Because we no longer have the fib retracement to guide us. Well, that's not a problem. I'll turn that off, and I'll turn on the trend-based fib extension, and it tells us that this is going to face resistance at 336. And so there is still room higher. This has already confirmed this level, and even if we get some kind of a red candle, it doesn't matter. I think we're going up to 336. That's the power of the fib chart for both telling us where a stock is going to pull back to and for telling us where a stock might go if it breaks out. All right, let's go look at NVIDIA to try to get a sense of what it's going to 64. Had an impulse move that drove it all the way up to 236. And since then, it's been in a downtrend until it got to the golden pocket. Now, it did not react as strongly to the golden pocket as Apple. It actually bounced a little bit, came back, hit it one more time, and on the second bounce, it began to take off. However, I'm going to give you guys my prediction for what NVIDIA is going to do between now and earnings, because it's already failing here at resistance. I believe that NVIDIA is going to run sideways between now and its later earnings event of August. Its earnings is Wednesday, the 26th of August, which is later than Apple's, which is at the end of this month. Now, what I see happening is I see this moving sideways. I ultimately see it coming back here by earnings, where it could have a breakout moment that would take it back to 236. But I do see it having a lower low between now and then. Now let's go back in time, because I want to show you that it really did that exact same thing not too long ago. Here it had a double top, and then it sold off, went sideways into earnings. Here we had a double top, double bounce. It came back up to the trend line. It didn't hold, and it actually went lower before ultimately climbing to earnings and then selling off after that. The local range that we're in on NVIDIA is between 209 and 189. We just hit 209, and as I like to say, resistance resists price, and so we could go back to 189 right now. Now, how do we know if we're not going to go lower, but instead we're going to go higher right now? Maybe money will rotate out of Apple after its next earnings and then flood back into NVIDIA. Well, it's all about the levels that it can hold. Specifically, it's got to get above 209 right now, and it's got to hold that level, and it's got to advance. I don't see that happening. I think we're going to roll over. I think we're in a sideways trading range for NVIDIA. Let me know what you guys think in the comments. Okay, let's do a quick lightning round on some stocks I've talked about recently. CleanSpark, I told you that I bought some around $13.40 and that tomorrow it was going to pop. It ran up nearly to $15, a great swing trade. In addition to that, I've given you Pfizer a couple times in recent videos and told you where I had my stop loss. Pfizer has simply been slowly climbing. Today we had a huge move higher, hit $25.30. My local target is $25.75. I'm raising my stop loss on Pfizer. It's doing very, very well. Let me know in the comments section if you've made some money following me on Pfizer. Okay, let's talk about Netflix. Their earnings is tonight. I talked about it at the beginning of this week, and I told you guys what I was going to do with my money, which is that I'm going to buy any dip that Netflix earnings gives us, because I believe that the sellers are exhausted. There's going to be profit taking and going short, and I believe that if we get any kind of dip, it's a dip worth buying. They're going to simply cash out their profitable short trade and begin to go long again. That's what I'm imagining is going to happen. I hope that we get a dip on Netflix. Let me know what you are going to do with your Netflix. Okay, let's briefly take a minute and go into the MU chart. People are interested in owning MU, and when it stops falling, they're going to be scrambling to buy once the candles start to go green. Let's go look at the MU chart. Okay, there's a lot of things that I've got on the chart right now that I want you guys to be paying close attention to. First of all, we finally hit my 861 level. Now, this is the level that we need to watch. I want to highlight to you that over here is previous resistance. That's closer to $800. 861 was a critical neckline level, but it's a level that we want to see it bounce at, and so far it hasn't bounced. It seems to be pointing straight. And a highlight to you down here at the bottom, we've got the RSI, and really strong stocks tend to reverse at 40. Beneath 40 is a strong breakdown capitulation level, and I don't think MU is in the position of breaking down. I think it's simply entered into a consolidation and is looking for key support so that everybody can load back up and buy again. So watch 861 throughout today to see how it reacts ultimately. Right now, it seems to have cut through it. That was the neckline. Let's look for the bounce closer to 800. Previous resistance becomes support. And again, as I said, when these candles begin to go green, they're going to go very, very quickly back up. Absolute critical support, and specifically that 40 RSI. If it can hit that in reverse, it shows that MU is very much still in demand, and we're sitting there right now. So I would say this week we're likely to find a bottom in MU that's worth buying and holding all the way into 2027. Let me know what you guys are doing with MU. I've been waiting for this one to come back so I could get a nice long-term position in it. All right, I'm going to be teaching that Fibonacci this Saturday. You do not have to be a member of my Discord. It's 4 p.m. Eastern time, but you do need to go get yourself a seat and get yourself locked in. I promise you I'm going to do a detailed teaching on the Fibonacci like you've never heard before. And I've got a Fib checklist, which is a detailed breakdown of the Fibonacci, what my specific settings are, and why. You're going to walk away with that. Thanks for watching the video. Peace and blessings.
This guy is the best scalper in the world for the first time ever, where he showcases the power of his strategy and breaks it down step by step.
It's Fremont. You wait for this candle, you put the stop loss here, you target either. This is the main reason why a lot of traders lose money. They try to anticipate what the market is doing before the market does it. People call this manipulation. They try to break out and they fail. This is the reason we will get here.
You finally will see a trader break down candle by candle exactly what he thinks is going to happen live during New York session.
We are getting ready for the squeeze. The squeeze will be present here. Look.
There you have it.
When I told you I will scale out, it's exactly because when you see this, the next step is aggressive sellers.
Yeah. You coded the algorithm. This is a top 1% trader showcasing his strategy for free.
To give to the audience a little bit of reference, you can either do 15 minutes, 3 minutes, you can do 1 hour, 5 minutes, or you can do the most aggressive one. That is what I do. The setup that we took before is exactly what I will execute in the World Trading Cup. How I did this performance in the World Trading Cup is building profit for the day, building profit for the day, building profit for the day, and in directional days I risk, for example,
Fabio Valentini. You've never seen anything like it. It will blow you away. Make sure you tune in to this episode of Chart Fanatics. Welcome everyone back to Chart Fanatics, the go-to channel for all of the very best trading strategies and concept breakdowns with the very best traders in the world. Talking of which, today we have a world-class scalper with us, a future scalper at that. He has been in the top 3 in the world rankings of the Robbins Club, actually achieving in a 12-month period over 500% return, and that is in the futures division as well. You probably already know who it is. If you don't know, you're going to get to know. We're going to go through his exact strategy that he used to be able to achieve those incredible results on the world stage. It is the one and only Fabio Valentina.
Thank you for hosting me, Ritz. And today we will go deep dive in the model that I used in the World Trading Champion. I made some videos about it, but I keep the source for this podcast. And before starting to explain how the model works, we need to explain what's the misconception about market structure in the market. So I will just start drawing it and explain what 90% of traders do and why 90% of traders lose money. So let's start with
I think that'll be helpful.
the concept of the market structure. That's what usually a lot of traders do, and you can confirm it. This is what usually it's done, watching a market structure shift or change of character or breakout. There are 100 terms that you can use for it. And what they try to do is they try to go trend following when pattern like this presents, and then they can just wait for the retracement to jump in, just going through, considering we are in a short sentiment here, like using the concept of supply or order block, if you want to be more fancy following the algo, mitigation level, and continue to go down. Now, what I tested in a lot of years of experience is that this pattern usually doesn't work if you don't frame it in the correct concept. And to frame it in the correct concept, you need to start you exactly where you are in the market and what's the big picture that you are watching. Because if this pattern is presented when the bell curve of the distribution of the day is like this, you are exactly jumping on a trend to go against the lower distribution of the volume. And what this says statistically is that only 30% will go through, the rest will remain in what is called the fair value area. So you will just keep getting stopped out till the market really decide to take off. And this is the reason a lot of traders that try to embark on a journey of using trend following strategies, they understand really soon that the win rate is not what they were expecting, like 70-80%. When they try to target, for example, this level from here, and they say, okay, I will just have 50%, 60% win rate, 1 to 3. This is not real, because you are not reading what the market is saying. You are trying to predict the market.
Okay.
Now, the good point about order flow and about volume analysis in general is that you get the knowledge to understand when to stay away, because if the same pattern is presented in this area, it's a completely different situation. To explain you this, we need to go to AMT. AMT is the real nature of the market, and this is the concept of auction market theory. Like market is an auction, and it goes from balanced area where all market participants are transactioning efficiently to imbalance. Now, market is not usually in imbalance, it's usually in balance. So that's the reason why traders that start take streak of stop loss, because they try to get the long and they get liquidated by, you can call what you want, you can call spring, you can call liquidation, you can call liquidity seeking, everything you want, even if it's not what happens behind the curtains, but you try to get the last spring before the move up. And you notice that this 1 to 10 becomes a 1 to 2, because you take 4 stops to try to do it. Now, if you do this simple change and you wait for the market to get to a condition of out of balance, your win rate will jump up by at least 20 to 30%. And this is exactly the building point of the model that I use. Why I call it a model and not a strategy? Because the concept of strategy is a group of rules that you need to follow strictly. And how can you follow a group of rules strictly without understanding the narrative if the market is a dynamic entity? It's like trying to cage an animal that is not made to be in a cage. And it changes every day, it adapts. For example, yesterday, there was this situation about America bombing Iran. We open with a gap down really heavy. You cannot expect that the market today will behave as Friday. It will have a different behavior. Now, what it's helping you is understanding how you can use the profile to exactly time your entry and your area. So this is, and is understanding the location. The location is when you can efficiently trade. When you are out of balance, so your model is okay to be traded, you start to see what all the traders are using. So you start to see the market structure and you start to validate which area can be used to jump on trade.
Yeah.
Okay. So now it comes handy to use supply and demand zones, and it comes handy to understand inefficiency. Now, inefficiency, if we can talk about it, is misconcepted nowadays because it uses the term fair value gap.
Yeah.
But what happened really behind the curtains in the concept of inefficiency is when one part is more aggressive than the other.
Yeah.
So the market gets really momentum in one direction. And this is, if you think about it, is the best moment to transact because the market is telling you this. And this is not my personal opinion or your personal opinion. What the market is telling us, look, I'm out of balance. I'm searching for a new level of balance that will be down. So it can be here, it can be here, it can be here. But I'm telling you that I will go there. Okay.
Yeah.
At the same time, it's telling you that the sellers are more aggressive than buyers because you are getting this kind of concept. And that's when you go to step 2. Step 2 is the concept of the condition of the market status. And you have 3 possible take profit that you can frame by watching at the other area. Now it comes handy, a concept called order flow that is not a concept, but is like an alphabet, a new way of reading the market. So 90% of the traders try to understand what is happening inside a candle using multi-time frame analysis.
Yeah.
I think the real inefficiency is the way traders analyze the market. Because it's like trying to get the bullseye blinded. Like maybe one time it will work, 2 times it will work, but you don't have exact data about the location.
Yeah.
So what you can do is that you can use this area that create the breakouts. And let's consider that I make an arrow here and we zoom out what is happening exactly inside here. Okay. So if this is the swing point that break this law, traders will just watch for what is called fair value gap or inefficiency. That is when the candle is not transactional efficiently. What you can do is that you can use from point A to point B using profile to watch exactly when there are low volume node.
Yes.
And I know this because I saw the other interview that you have made, and I really like the model also of Carmine Rosato. I think he's a really good order flow trader, and he's doing something really similar to what am I doing, because low volume node, it's a really good reaction level. So you can use it as a continuation. If we have a low volume node here, the probability that we will go down is really high.
Yeah.
So you start to add the concept of refinement. You have the direction, you have the location, you have the refinement of the location. Now you need the step 3. The step 3, it's a little bit more difficult because it's the part where you really need experience and you cannot just automate it and say, okay, when it's happening, because it's really sensitive to market. What I use is analyzing big orders. So when there is in one specific point, let's say here, a lot of aggression. Okay. And in order flow platform, typically you see bubbles.
Yeah.
Okay. If you use any platform, you can see bubbles. When there is direction, location, and aggression, your ability to predict is 0, but your ability to read is 100. You are exactly, you don't have a huge stop loss, for example, out of balance. You don't have a huge stop loss above the high, but you can get protected exactly above the big sell aggression.
Yeah.
So your risk to reward rate, it's really big, but at the same time, the probability of your trades is really, really big also, this one. what you are doing, if we can make an example, is just swimming on the direction of the flow.
Yeah.
Because you are being pulled down by the market aggression and also by all the traders that were long. And when this area breaks, will close their position. So you get the catalyst down, you get the location of the aggression of the sell, and you get also the target point that can be based, we will see this on chart directly, on the previous balance area.
Yeah.
Because how the market moves, let's remove this part here. But how the market moves is that is seeking balance. So if you go out of here and the previous balance area was this one, where your POC, point of control, the previous point where the majority of the volume was located, it's here, the probability that when you go this pattern and you enter here, let's say, you don't need to break your mind to understand where you can put your target. Maybe I can try 1 to 30, and this is another error. Traders think that the risk to reward is not influencing win rate. The more you seek to go above the ATR daily, the more the probability will get lower.
Hey guys, I hope you're enjoying this episode strategy breakdown from every episode for free on chartfanatics.com. So the link for that is in the description below. So just make sure you click that. You just put your email in, and every single week we will send you an up-to-date PDF strategy breakdown for you to keep, to learn from, to reference for free. And don't forget, we're also launching Chart Fanatics Live, where your favorite traders from Chart Fanatics will be live trading every single day. I will also be including special guests on the live Chart Fanatics edition. So make sure you go subscribe to that YouTube channel right now. It's linked on the main profile of Chart Fanatics, so make sure you're ready for that. Up to 6 million in futures funding. That's only possible at one place, Apex Trader Funding. You can get up to 20 accounts at Apex. No other futures firm offers anything even close, and that is why Apex pays out the most.
When we are in a condition of fear, our heart continue to have tachycardia till we don't get back to calm.
Yeah.
And we say, okay, now we are stable. Okay. This is exactly what the market is doing. So the step 3 is getting a location for aggression, so that the trigger of the model is aggression and that target point. The target point also is really objective. And I noticed during this year and also scalping during the World Cup champion that we can also get a window during the day where this model works really good.
Yeah.
Okay. So the best session to use this model is 100% New York session, specifically for equities, so for Nasdaq and for ES, and is not working properly during the first hour of London session. I try to use this model, and during London session, you see out of balance, back inside balance, out of balance, back inside balance. This is called by traders fake outs, and it's usually when the market is not really clear about direction. So one concept that I use to remove this is that I don't trade before New York session. I only trade before New York session in the World Cup, but with a mean reverting model.
Okay.
So I was doing the opposite, and we can go also through it because it's extremely profitable and it's even easier to implement this one. And this is the following one. So let's say that in a balanced market, from the statistical perspective, during the London session, one other model that I am using is the one that takes opportunity of when the market is deep discount based on the volume distribution, and me snaps back in. Now, it's the same concept, it's the opposite. Now, we are seeking for buy. We have a target. Why we are using this target? Because this target is where the maximum volume is transacted. So there is interest. Like market operators are willing to transact here. What I do in this area is that I don't take the first movement. I wait for the first breakout. You can use price action for this because I get clear market participants of what they want to do. I don't risk that this is only a retracement and then the collapse.
Exactly, yeah.
I get a movement that is clear. When I get the first breakout and I'm back inside the balance, this probability is really high.
Mm-hmm.
This really high probability. Now, to increase even more the probability, I wait for the hand of the big market participants. So I wait for big trades.
Yeah.
So the common bubble of buy order
Mm-hmm.
that I can just say, okay, I jump in with them.
Mm-hmm.
I don't need to be a wizard. I jump in when the best one are jumping in with big volume. And if I'm wrong, I want to be wrong immediately.
Okay, yeah.
Because all the additional losing that you get when you are an inexperienced trader and say, oh, maybe I put the stop loss, because it will snap back. This is really something that will destroy your bank account and your trading account.
Mm-hmm.
What you need to do is be wrong immediately. And when you are right, when you see that you get an additional breakout, immediately stop to break even.
Yeah.
So after this small movement, you are already risk-free on the
You're
market.
quite aggressive with your risk management.
I'm aggressive with my risk management because I need to put in this small amount of ticks,
Mm-hmm.
0.25% of my account or 0.5% on the account.
So you say you could do this or take this concept without order flow, for example,
Mm-hmm.
but of course the order flow just allows you to have more confirmation, align more with the larger orders.
It's working also for price action,
Mm-hmm.
but it's like something that when you see it, you cannot unsee it.
Mm-hmm.
So when you are trading, your mind as an order flow trader says, okay, price action is nice, but let's see what is happening in the level. You want to see it. And then I think it's not convenient nowadays to not use order flow for one simple reason. We are edge seekers as traders. Every 5% more win rate brings us more money at the end of the month. Every 1 hour, 2 hour, 3 hour more at the end of the month is more money for us.
Yep.
So why not using all the information available? I've been in trading floor. I've seen how they trade. An institutional trader, considering that 90% is algo trading nowadays, but the discretionary trading for alternative markets, they still use order flow. They use order flow because they want to see what they are doing. Maybe they are more long-term because they work with huge amount of capital, so they prefer to use volume profile. But for short term, after 10 years of trading, I never seen something better than order flow. So still nowadays, the model is not getting changed. The only change that I've made is during high compression period that we have seen in 2023 and 24.
Mm-hmm.
The months that you are going through summer, like end of March,
Yeah.
May, June, you see the market is getting a little bit compressed, and August, like Nasdaq movement are really choppy. So what you can do is just say to create specific condition where you will not transact. So this model, it's okay for London session, it's not okay for New York session, but it's perfect for the summer. So
Gotcha. Yeah.
I'm giving you a model that it's perfect for the months that we are going in, because this is the behavior. Maybe with Iran and America and Israel, it will not be the summer to do this model.
Could change.
But yes, it's working properly.
But to your point, in terms of order flow wise, regardless of conditions, that understanding of order flow remains, right? So in terms of the principles that you're using when using order flow and understanding that information and deciphering that information, regardless of the conditions, whether we're compressed or whether we're getting a lot of volatility and movement, the lessons and principles you take from order flow remains universal. So outside purely price action, the problem is, one, you're guessing, right? You're trying to guess where stops are, you're trying to guess where the big players are, because you can't see it. But equally, when conditions change, the same concepts aren't universal. Now you have to change and be able to adapt. While with the order flow, you still have to adapt. You still have to change in terms of maybe your risk management, your trade management. But the order flow itself, like those orders are still orders. Those stop losses, those participants are still going to be the same. But just a quick question for yourself: were you always an order flow trader, or is it something you picked up?
No, I was a price action trader, but I'm really open-minded. So if someone comes to me and say, Fabio, you can improve your risk to reward from here to here using option flow,
Yeah,
I'm really open to it. Like, I think that a trader needs to be the most open-minded person, because if a new tools, for example, if new data like MBO orders can improve your model, you shouldn't put your ego here and say, no, my model is the best one. If it's improving your profit factor and Sharpe ratio, just use it. And connecting to your point, I went to order flow also because the price action, it's harder to replicate for students. Because let's say that we have 100 people watching this, okay? And we say, okay, use a break of structure in favor of the trend. For someone, a break of structure is this. For someone can be external break of structure. For someone, they take the big swing and is this the break of structure, okay? If I say to you, look, drop for the full day the profile is this one. This is the level where you are out of balance. It cannot be this, it cannot be this, it cannot be this. If I say to you, Ritz, when you go here, just put a filter of 30 contracts on NASDAQ on the 1 minute. You cannot think it's here because you will see the ball. So it's really objective. Now, there is a skill in reading, of course, market sentiment, market change. But when I explain you something, it's something that you can go home, test it, and you will see exactly what I'm seeing. With price action, I think the subjective analysis is really heavy, especially if you start to input multi-time frame. So
definitely,
from daily to H4 to H1 to 15 minutes, 3 minutes, 1 minute. What's the probability that the trade that you frame is the same that the trade that your student will frame? It's really low.
That's what I was going to say. So when it comes to, say, teaching, for example, when there is no order flow, that subjectiveness becomes quite a difficulty because everyone has a different perception. As you said, there's a really good example of showing that. But then when you have order flow, regardless of that, the time frame potentially and where you're looking, that the areas of the charts are all going to be the same. Everyone's going to see the same thing. And those numbers are going to be reflected exactly the same across the board to every single person. While, even the subjectiveness of, say, just candlesticks, like a large red candle to one person might just be, that's just another candle. While to another person, they'll be like, oh my goodness, the market is completely falling off a cliff.
When they explain the model, when you see a big candle, how much it's a big candle? How much ATR you include? So there is a lot of subjectivity. And also, let's consider that we have 3 levels of analysis. We have lagging, we have real time, and we are leading. Lagging are indicators. So if you get MACD, if you get stochastic, if you get RSI, this is created as a derivative of price. So you get MACD that is always going after price, never anticipating. Price is real time. So you are watching what is happening as an effect in real time. But with volume, you are watching the narrative before the price created. I give you an example of something that I never explained, okay? And this is something that really helped me to see the developing pressure to be able to put at break-even sooner than other people, okay? So let's say that we are here. We have a long bias, we are out of balance, and we have the previous day point of control, okay? So with price action, when can we put at break-even? When we break this level. You agree with me? Yes, because we have a level of protection that we can put here and we say, okay, it will retest and go.
We shouldn't break that low,
with
right?
volume, we can use one tool that is called CVD, that is cumulative volume delta. What cumulative volume delta is giving you is a benchmark for pressure of volume. So you are out of balance, so the probability you will find a new point of balance is high. With cumulative volume delta, you see, this is the price, maybe you see the cumulative volume delta doing this. When you are here, the cumulative volume delta is doing this. What does it mean? That aggressive buyers are really pushing on the gas, and there is a lot of interest because as the price goes up, you don't see sellers aggressive, but you see that buyers are with of Mustang from 1969, okay? And the base auction is 1 million, and you see buyers starting 1.2, 1.4, 1.6. It means that the price is probably going up because they are interested in the piece. So what you can do when you see that cumulative volume delta is pushing up and you see this leg already building, is that you can already put to break even.
Yeah.
Because you know that as the smallest retracement, aggressive buyers will continue to push up and you are protected.
Yeah.
This is something that you can do only with leading indicators. You cannot do before. Of course, I didn't talk about global macro, but also global macro, it's a leading indicator, or on-chain analysis for crypto. But for intraday and scalping, like order flow is the benchmark to go.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, Funded Next. Funded Next is a proud sponsor of Chart Fanatics, and they have been leading the CFD prop firm industry for many years, literally a top 3 prop firm. Now, why is that? Let me quickly just run through all the incredible things that they do. First off, they have challenges for every trader. Whatever you're looking for, they have. They have a 1-step challenge, they have 2-step challenges, and now industry-leading instant funding. You get on-demand payouts. Now, let me tell you though, the trading conditions, they are the best in the market when it comes to raw spreads, and there are no slippage. When it comes to trading platforms, those limits. So then the auctioneer or whoever's like running the auction will bring the price down until there's some interest. And then you never know, like it might seem like, oh, no one wants this car, no one wants this vehicle, or in this case, obviously, no one wants to participate or place any orders in this market. But then once it hits the level that people are interested at, let's say if it's that car example again, let's say we started at $1 million, but no one's interested. Bring it down to 800,000. Now suddenly someone's interested. One person's interested. Okay, we bid it up. But now people who were there for that particular vehicle,
Building momentum.
yes, and then you'll suddenly see how, we started at $1 million and no one was interested, but suddenly we're blasting up to 1.25 million and there's still orders and there's still more bids, and therefore that velocity and that amount of demand.
At the moment, you go to the market price.
Yes.
Because if the market price is 2.1 million, you start to see at 1.9 million of auction, market participants saying, okay, let's go on increment of 50,000, not 200,000. So the market gets lower and you build new balance. And then the point of control is the seller that closes it.
Yes.
Usually the auction. So this is how really the market works. And this is what I use daily to frame my entry. You don't need to abandon your model. Just see if you can get better precision and remove the losing trades using this concept. So it's not something that you will not start from scratch. Just expand the level of knowledge you have from candlestick charts.
It's like you said earlier, as a trader and a pure trader at that, and who's someone who's focused on trading 100%, that's your goal, is to how do you build more edge? How do you squeeze more edge out of the same knowledge, playbook or strategy that you're using? Because that's really what you do at that point. You're not jumping, okay, I've got this strategy, but I want to find a better one. That's not how the mindset is, right?
Exactly.
And then if you come across a really good playbook and edge and strategy, you always can start to add that. But your focus point is, how do I make this playbook the best it can be? How can I be the best trader possible? And in this case, you might have a profitable price action model, but your goal then is, okay, how do I squeeze more out of it? Right? So in terms of using order flow, if you're not using that already, that would definitely help you to squeeze more out of it. Now, I'm sure there might be some people who try and learn order flow and go, this is a bit more complex for me.
Of course
and therefore, for that particular individual, it might not be as helpful, for example. But I would say it's probably a slimmer amount of people, right? But the worst thing you can do is just not even try, because you already write it. It's like people who need to learn fundamentals, right? In macro. They don't, because they go, it's complex, and the price actions are not
Too much to study.
But in reality, when you look at even just this year, but COVID was a great example of it for as a lot of traders came into the markets. But even just this year, for example, is a great example. Last year, yes, we had quite a bull market, but there wasn't really a crazy amount of fundamentals behind in terms of like changes and volatility changes and market changes. While this year we're just coming into towards the end of June, and literally we've seen highs, lows. We've seen the markets completely shift month after month, week after week, and it's probably not going to change. And we call this a Trump market. but again, if you don't know macro, it's so easy for you to sit there and go, the markets are crazy, I can't understand what's going on, versus the people who do have an understanding. And I won't even class it as like a deep understanding. Some people who just have a basic knowledge allows them to have more clarity and calmness, which as a trader, as we know, is extremely important. One thing we'll do, so from here, Where should we go from here? Should we recap the two models quickly? Did we cover two, right?
To go on one point before that is called edge decay.
Yeah, let's do it. Yeah,
Before going to recap the model.
let's do it.
The concept of edge decay is when your model lose edge.
Mhm.
Okay, and this is something I notice a lot with price action. So for example, before I was using supply and demand in trend following, and when the volatility change, for example, you are creating one rule that you have moving average long and we are adding to the trend when you get here.
Yep.
Okay, volatility change, so the length of the swing, if it goes from here to here, you already take a lot of stop loss. Not because you are wrong, the direction is right, but the market will just swing higher. And I think every discretionary trader notices it.
Yeah.
So this is edge decay, and it's your lose of edge in the change of market condition. It's what's also Jim Simmons was talking about with his Renaissance fund. And with order flow, what is interesting is that you cannot actually have an edge decay because what you are watching is the true nature of the market. So you are not framing the market in something that is close rule from A to B, but you are understanding what's happening. And I will give you an example of something that improved my model by 4 or 5 percent in win rate, that it's a lot if you are a scalper. And is the following one. Before, if you are like closed in a range, you are trading price action and you are trading continuation. With breaker retest model is really common. Okay, so you wait for this, and then you wait for the wick down, and on the test you go long.
Yeah.
If you start to do one simple exercise and you start to only use order flow to zoom out when this is happening, like you take one specific part, so you cannot say that order flow is complex. You take the same candle, just you make an exercise, watch cumulative volume delta here and orders. You can use also footprint for this. If you see that at this level there is a lot of aggression and the cumulative volume delta is doing here, it means that this movement is not supported and the probability that you will go down, it's here, and it's something that is telling you before the price bring you to stop. So you can just decide not to jump in. And this is a concept that I want to cover because it's something that I went through when the price action model was not working properly during the 2019, and I had to step up the game, and I was thinking, no, now I need to study from zero and I need to implement something that will cancel and erase all the learning curve that I had with price action. But it's not like this. Just you will start from where you are before, just understanding what's happening behind the market. Of course, it's easier to think that the market is dominated by some black entity behind the table because understanding the mechanic is difficult, but I can guarantee you that you will improve as a trader. And so we go now on the summary of the two models.
Yeah.
And we start with the trend model. So this model is a trend following model, and we will go before on the timing. That is New York session. Okay, so we want the biggest amount of volatility to implement this model in live market condition. And I don't advise to keep the trades for the night. So this is a model that gets closed as soon as the market closes. You don't bring overnight the trades because you also need more margin for futures. It's not convenient at all. Just if you are in profit or if you are in loss, cut the position and tomorrow it's another day for this one. So this is the timing. Then when we go on the step one, the first step is understanding market state. Price action going here. And we can have an imbalanced market. Okay. With this model, we want to transact here. We are not interested in this market condition. So also for the gamblers, you have one rule that keeps you out of the market. And this is really important because when I start scalping with price action, every movement was okay for me. Like every small impulse, and then you say, okay, I took 3 stops for the day, I'm out, and then the big moves arrives. So this is the lock where you cannot enter if you don't have exactly what the market needs to tell you.
Yep.
This is the market state and what we frame as the step one. Then we need the location. The location is exactly your swing point, that is this one, okay? That you need to analyze deeply, because you need to understand if you want to jump in here, if you want to jump in here, or just if you want to jump on the train sometimes from the lowest point.
Yeah.
Because momentum is, okay, I jump here, but I cover myself here. So it's still a good risk to reward rate. What you use to do this, you use profile.
Yeah.
Okay, use profile. And what you search is low volume node. So where the market, let's try to draw the profile, okay? Say that this is the profile for the swing point. What we can see here is that this is the low volume node. Not the best at drawing, but I think it's understandable that
we're going to see on the charts, right?
The point where the lowest volume get transacted. What you can do here is do this, okay? So what I do usually is I don't put a limit order.
Okay.
I put an alert a little bit below.
Okay.
Because when it arrives there, I want to see big trades, big orders, okay? So as we were saying before, we started from the timing, we went through the market state, we went through the location, we go to the step 3, that is execution or trigger. What you want to see is aggression. If you are seller, you want a big red ball, okay? When you see a big red ball, you can jump in and your stop loss will go here and your target will be the previous balance area.
Yeah.
So if we are here, the previous balance area, it's here. Let's see, the POC. This is our target. And we are going to take out not half the position and let it run. We are going to take out the full position because the probability is that the market will reverse from it 70% of the time. So it's just not worth to keep the position for only 30% probability more.
Yeah.
Better that we take all that we can in this case. Now, let's go to the model 2. And the model 2 is mean reverting. So the model 2 is using the market state that is the opposite.
Yeah.
So it's using consolidation. Market state is consolidation and is when the profile is protecting from breaking here and breaking here. Okay, so you get from here to here to here to here.
Yep.
What we are trying to take is the out of balance condition that get back inside balance. And as I told you, we are not trying to take the first swing because it's risky.
Yep.
We are getting the second swing. So when we have the first breakout, we are just waiting for the retracement. It's the same concept as before. Now the location is the swing.
Yep.
You frame the location, you wait for the retracement. So let's consider that this is the swing. Same stuff, low volume node, aggression seller. Consider that we are here maybe. Yeah. Where we go, we don't go here. This is an error that everyone is doing. The probability is not high. You go here. You go to the
where the
POC.
Bulk of the auctions taking place. Yeah.
Where the probability that you will go to balance is really high. And if you are wrong, you want to be wrong immediately. If you have big sell orders here, immediately here it's your stop loss. A small trick for the scalpers, aggressive scalpers. There is a way to avoid slippage, or at least minimize slippage. Put the stop loss not above the high.
Yeah.
Because above the high, there are a lot of orders, and what you see is that market will boom, accelerate. Example, when you take previous daily high, previous daily low, previous weekly high, previous daily low, and protect them. Just put your stop loss 1 or 2 ticks below the high.
Okay.
So you are taken out before everyone that is...
Before that acceleration takes place.
And it's worth it. I tested it and it's worth it because sometimes you get 5 ticks, 6 ticks of... and it's a lot.
Because the overall chances of price getting to 1 or 2 ticks below that high and it not go through.
Not it's almost zero. No, it's not zero. Sometimes it happens and you just want to cut your ends, but on the long term, like statistically wise, it's worth it.
Yeah. Because in this case, for example, just to recap, so this recap-wise, timing-wise, you're looking at potentially London, right? And then in your consolidation periods, such as normally your summer months, right?
Yes.
Just as an example. But in terms of recapping the thesis, it's the fact that, yes, we're in a range, and yes, you could target here because price has shown that, yes, we're going from high down to low. But the highest probability is that auction area where the bulk of the orders and transactions are taking place versus, okay, yes, we could get here, but there are chances that we could get to there and rebound back up to that auction area again, or rebound back up to the high. That there's too many variables trying to target here, or especially lower, versus the highest probable, and it's not guaranteed. Nothing's guaranteed, but the chances are way more in your favor, especially considering the information you're taking on board. Because again, you're not just entering from the first spike out of the range. You're going to wait for your confirmation and then look to execute.
Exactly. And then consider that there are some days that they are really blessed days where you have this model.
Yep.
Then the market breaks the low. You activate the second
the
model for New York and you take two amazing target and you are done for the week. So yes, these are the two model. Now, the tricky part is correctly identifying the consolidation area because you can make it as simple as possible and say, this is one day. So I use the profile of the previous day.
Yeah.
Okay. So it's easy. You don't need to have headache about it. You just wait for the break. Okay. There is a more advanced model where you have more execution, where you get the ability to identify the consolidation phase. Okay. You just take an order flow platform and you see the compressed candles and you just plot the profile on there. This is what we were going to do because it needs a little bit more skill. I will explain. You plot the profile. And I will show you something really interesting that not TradingView, but some order flow platform are willing to give you also the delta of the downside. Because if you see here that you are going up and is dominated by buyers, it's not the best condition to get to buy trades because the probability that you will do this, it's really high.
Yeah.
At the same time, if in this area you see a huge delta sell when you break out, it's your birthday.
Yeah.
You just go for it.
Perfect. Should we go over quickly the pros and cons and then we'll pull out the charts? Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZella, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZella and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZella, so you can actually go on there and see the rule set. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZella right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZella. The links for TradeZella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
Yes, so let's go on the pros and cons. The cons is that if you use the second model, compression days are killing you. You work on the short-term profile that you can trace by yourself. Consolidation is killing your win rate because maybe you take 5 small stop loss. 5 small stop loss is maybe a loss on $5,000. then you take profit and it's like 15, 20,000. But at the same time, psychologically, the win rate gets lower.
Yeah.
And if you see a lot of red in your account, even if at the end of the week you are still profitable, it's heavy for beginners.
It's a heavy app.
So one bad concept is consolidation that directly affect win rate for the model. And this is the reason I created a second model, because when I lose with one, I make profit with the other one.
Got you.
So it's like balancing the equity curve, giving you more execution, but the drawdown gets lower. So it's worth it. This is the first cons. The second one is stress. We need to be honest with it.
Yeah.
When your trades gets to the level, not in a prop firm, but in a real account, where the single position is worth the salary that you were taking, for example, 10 years ago. So you are risking 2,000, 3,000, 4,000, 5,000 per position. And in 2 minutes, 3 minutes, you can lose it. Of course, at the end of the month, it's profitable, but on the short term, it's heavy. Plus, like in the World Cup, I show transparently the trades I was taking. And one day I received a lot of insult from the people on Instagram because I've been transparent of one day taking 8 stop loss. Like small stop loss, like 5 tick, 10 ticks, but a lot of stop loss because it was a day that...
And you risk sometimes 0.2,
0.2, 0.3. Yeah. So it's like 9 stop loss is 1.8%, 2%. It's not a big amount. You can deal with it. But when you talk to people and you say, look, I took 9 stop loss, they say, learn to trade.
Yeah.
So they just think that a profitable trader is a trader that is having a huge amount of win rate. Yeah. They don't consider that maybe the stop loss are incredibly smaller than gains.
Yeah.
So the stress part, and the third cons is the time commitment.
Yeah.
Like to execute this model, you cannot do it as a hobby. You cannot do it as a side hustle. You need to be on the screen from the starting of the newer session to the end, because the position not only need to be executed, it's set and don't forget. It's set and check. It's something like this, because you need to trail your stop. You need to manage.
This is a model for real traders. This is
a model if you want that trading gets your full-time income.
Yeah.
Okay. Now on the London session, I manage companies with my business partner, but in the New York session, 3 or 4 hours I do this. And it's necessary. You cannot just get out. You can just decide that after a certain time you don't open trades so you can enjoy dinner. That's of course can be something good. On the pros, the first one is number of trades. Why this is good? Because drawdown gets covered really fast if you have a big profit factor and Sharpe ratio. So you can take 9 stop loss for the day, but by the end of the week I was again in profit. I was high watermark, so I was creating new high on the equity curve. And also a big number of trades creates something interesting for hedge fund that wants to give you capital, because a model that in 12 months does 2,400 execution is more respected than a long-term model that in 12 months have 30 trades.
Yeah.
Because the data sample-wise, this model is more valuable.
Interesting.
It's giving you a lot of room of improvement, and it's giving you a lot of data analysis that you can input, and you understand really fast if your model is not working properly in certain market condition. Because, for example, I have a benchmark that is the maximum amount of stop loss I've taken, that is 11 stop loss.
Okay.
It's an humbling experience. But you know that the market can stay in compression for 1 full week. You know that every day it's a fake breakout for 1 week. I saw the last videos of Carmine Rosato. He was like taking a huge amount of stop loss, like for 3 weeks, but he's still in profit for the month.
Yes. Yeah.
That's the good part about scalper, the number of execution, and it's really easy to go back in profit. The second good part about trading with this model is that you don't need headache. Why you don't need headache? Because the prediction part is not there. You are just paid to read what the market is telling you.
Yeah.
So I don't need to start to say, considering the angle of gun, maybe the price will skyrocket to this price because no, just this is the market state, this is the location, this is the aggression, this is my trades.
Mm-hmm.
And another good part, maybe this is the best part, I should have put this, that you cannot do revenge trading, because if you don't have the condition to trade, when you trade large amount of size, you just don't feel confident to execute.
Mm-hmm.
If there are not the condition of aggression, just it's not worth it to do it. So the third part is just there is no headache in deciding and no revenge trading in executing something that is not there.
Yeah.
You know, with price action, I don't know if you ever experienced it, but sometimes you see something that is not there just because you want to trade. So you create the setup.
Well, you can have a bias, and then if, let's say, one time frame isn't giving you that bias, you can just filter through until you find one. Like our 10 time frames, let's say 8 of them are long, but you want to be short, you'll just go to the one that says short.
Yeah.
You know?
Yeah. This is something that I also did it. Like our ego is bringing us to the condition that if we say in our mind that the bias for the day long and the news are long, we will just take every demand here because we think every demand that is getting break, it's a fake
and
out.
Even down here.
Even
we'll say it's taking liquidity.
Till this wing doesn't get stake out, and of course this is a liquidation. So you also try the reverse, and then when you get destroyed,
that's normally the last resort, right?
Last resort, yes.
But another pro is that it's a high risk. It can be a high risk to reward.
It can huge risk to reward when it's not common. I need to be honest, but when Nasdaq is pushing, it's pushing heavy. And when you are in from the breakout of the level, and you are, because you need to consider that our target is the POC. Okay?
Yeah.
If you are here, there is no POC because you are creating value up.
True.
So you just decide to trail for the day.
Trail, yeah.
Okay. Sometimes you get some 1 to 30, 1 to 40. It's not common, but it can happen.
But even high risk to reward at like 1 to 4, 1 to 5, that's a common reoccurrence.
1 to 2.5 is the minimum.
Yeah.
1 to 5 is common.
Yeah.
1 to 10, 20 is not common.
But
it only, when I do 1 to 10, 1 to 20, it means that you see on the Nasdaq 2%, 3% for the day.
Yeah.
So it means that I really follow the market properly. But I cannot do 1 to 10 if the market is doing 0.25 for the day,
of
0.5.
Course, yeah.
Like I'm in tune with it. Like I don't.
Plus, it's not like you're focused on risk to reward. It's just part of the model. You're focused on understanding what's going on and then reacting and following your model accordingly.
Yeah. When your model and when your primary focus gets to protection of capital and risk management, you increase the profit.
Definitely.
Like when you put your focus on something that you think it's not directly related is when you make the most amount of profit.
Well, now let's go into, the charts, I guess. See actual trading examples, yeah. So as we've established, this is truly a strategy and playbook for real traders. Traders who really want to not only trade, but understand the markets at a deep level. So now we're actually going to go over trade examples on the charts of those same playbooks. And what do we have in front of us here?
So this is a order flow platform, is a deep chart. And what we have here is volume profile, distribution profile of specific consolidation area. So what I was explaining to you before is that you can make it stupid simple, putting just daily profile. You can do this also from TradingView. Maybe the volume will not be as precise as this, or you can just do it identifying the most interesting compression area. As you can see here, they are clearly visible, where the market didn't transacted higher or lower, it just stayed in compression. I use every day this area, and what I wanted to show you before is exactly this. You see, here is the volume. Okay, this is the volume. This is how much volume is transacted per price level. This blue line is the value area. So every time you see the model in consolidation, when it gets back, get back in, target.
Same
up,
on the upside.
Get back in, target. Up, get back in, target. Down, get back in, target. This one will be stop loss. But you have the second model. You have the execution model of this. In this consolidation, we need also to be honest that you don't identify it immediately. You can identify maybe it from here. You can take these 2 trades. This one is really uncommon because you start to see the real compression. Yeah, it's too early. Exactly. Now, what is interesting is that you can frame also the delta. What is the delta? The major amount of volume getting transacted from one side on one place level, the aggression. And if you see here, look how much is big the delta. It's exactly at the level where they accumulate the last time and created this extreme breakout. Okay? This one here, I will also explain you later why the news catalyst is something where a lot of people think that the market is seeking liquidity. But at the moment, this movement is made because market maker go out of the market. So the volatility gets higher because you have less limit orders. And in this case, the market explode up to create a new level of balance. So in this case, we have reversion model, reversion model, reversion model, reversion model, and stop here, probably. Aggressive model here, breakout, and we will go deep dive in the lower time frame because now we are in 5 minutes. Then we will drop down to 1 minute. This model can be used in every time frame. Like, to give to the audience a little bit of reference, you can either do 15 minutes, 3 minutes, you can do 1 hour, 5 minutes, or you can do the most aggressive one. That is what I do, 5 minutes, 1 minute.
Wow.
Okay? So 5 minutes is to watch the breakout candle. Okay? This one, I don't go deep dive inside it because it's impossible to execute. You see, it went out of balance, no retracement, low volatility, low liquidity, so it's impossible to take. Then we will go to this one, that is the 23, is this morning. Okay? This morning we will see exactly how the model play out perfectly on the trend following side. So I will show you how also the model behaves in London session. Even if I only use this in New York session, the model really works as also reversion model in London and New York. I want to show you the entity of the momentum to explain you why I do New York. This is New York. This is, you see how much is compressed. More retracement. This, when you take it, it just explodes. And this is what I was trying to explain you before as the flow, getting in tune with the flow. So what we do now that our area are clear, we can go to 1 minute time frame. And we will start with the first one, okay? What we have here is the previous area. This is the value area high. This is the value area low. This is the POC, okay? So we are clearly out of balance from this movement. You can either be aggressive or just say, I want to clear out also the high. So I just want that there is no obstacles in my explosion higher. This is something that I usually do. I don't transact only when you break out. I wait because it can be the reversion model here, you know? Then what we do, this is the magic. We activate the orders that are getting filter for the amount of aggression. Okay? So my filter usually is around 20 to 30. Okay? In this case, I think it's pretty visible. And this is the best example you can have. Look how much is balanced. Look what happens when momentum is building. So what I was saying to you, even before the breakout, if you know how this stuff works, can you understand that something is happening here? You are going from small orders, balance, to someone buying aggressively and continuation aggressively. Also, look at the amount of big orders that you have in bullish momentum and in bearish momentum. So you can clearly understand if you are following the flow or not. So the trades here is, like I was saying before, either the momentum continuation trades that you get framing the level with a huge presence of buy aggression. And this is another model that I also show on YouTube. That is just not, because this stuff happens in 1 minute. Okay? So every candle is 1 minute. You can either be fast and use only big orders, or just, as I was saying before, plot the profile from the beginning to the end of the impulse and say, look, let's zoom out in here. What we have a lack of volume here. So there is a huge area that we can use as a low volume node. Okay. So when you have the retracement and you get close to the area, you can decide to take this as an aggression or I will take this one as an aggression, okay? Maybe you enter here, you have the mitigation of the level, and then you have just continuation. Now, the more you wait to enter, the more it gets risky.
Yeah.
Because if you enter here, you are getting to a point where sellers can say, it's too expensive, the price. I went out of balance, but you want to be in fast and close fast.
Yes.
Okay? So from here, you can just identify from when the aggression is still bullish. I will start to be a little bit afraid here. I will start to say, look, the market is compressing again. The sellers are starting to fight back this huge momentum.
Yeah.
So maybe I can put my stop loss in profit.
Gotcha.
Below this low. Then what happens? That the market again, you don't need to be a wizard. The market give you clues because this breakout, you see, it's participated by huge buyers. The sellers try to get control back here, but what the market print? A wick. So it means that they cannot control the movement. And I would completely take out the position where I see that, because big sellers, no follow-up. Small sellers, big sellers, huge follow-up.
And close.
On this candle, you can go out. You can go out on stop loss in profit, or you can go out when you reach your risk to reward rates.
Yeah.
Okay?
Because with this, as an example, just to highlight.
Yes.
So as you say, sellers, no follow through, but consolidation.
Yes.
We continue. We break out. We see the buyers.
Again, sellers on the low.
Yeah. Wick, but no follow through.
Exactly.
But could you say that these sellers are entering, they're maybe not getting stopped out, they're still in the market? So then when you finally see the sellers and then the follow through, now you know you use this build up of sellers previously included as well.
What I use is exactly what you say. What I use is volume spread analysis. That is the relationship between price and volume. So if I see, like you were saying here, stay still inside the position, if this movement stop them out, the market will accelerate, of course. Okay. So what I see is that this aggression is the first one in all this movement that print this huge candle.
Yeah.
Why staying in a movement that is saying we are getting the control? It's like getting inside a war and being by the side of the weak parties. Like, doesn't make sense. And from here, you can see that participation is mainly by the sellers.
Yeah.
I want to show you something. I want to clear a little bit and get back. Remember how the volume is inside this area.
Yeah.
Okay. Let's remove for 1 second the big trades and let's go here. You agree that this is a compression area?
Yes.
Okay. Let's print it. You see that the market is not accepting below the value area. Because what happens is that here is transactioning correctly, but every time they go deep discount, buyers enter aggressively and get back the position here. This is exactly what's happening. Let's go on the today price action. And so we saw one New York and we watched one London session. And this is not a normal London session. This is a London session. This is after the bombing of Iran. So the volatility is even higher than a usual London session because the market needs to rebalance this gap. Same situation, Ritz. So if I tell you, forget about everything it's here. Just tell me in which area there is the major amount of delta aggression from the buyers. In which area you can see?
Would it be the buyers, you say?
Yes.
Would it be
exactly this one? And if you see...
Yeah, I'm getting this. Yeah, I'm tapping in.
If you see, this is exactly how you can identify when it's an accumulation and when it's a distribution.
Yeah.
This is where all the traders are struggling, like Wyckoff, accumulation, distribution. But how can I identify objectively what's happening? If you see from this level, aggression of buyers, catalyst.
Yeah.
Let's go down to the 1 minute. And we are already in 1 minute. Perfect. We activate the big trades. Again, same model. What we see? Buyers, aggressive, catalyst. Again, you see what sellers are doing. They are trying to push the market down. But what's happening? They're getting fucking annihilated by buyers. So, if you get the profile, as before, from the starting of the swing to the end of the swing, what you can see? You can see that volume is equally distributed here, and you start to have a low volume from here. So in this case, to follow the exact model, you will be unfilled in this position, okay? Let's go education-wise on and see what's happening and reading here. What you can do, considering that you are still in the same area, you see that from here to here, they create a new dealing range, a new area. So you can do just the same from here to here, and you can go deep dive inside this location.
Yeah.
Look where is the value area low, and look where is the low volume node. You see this lack of volume here.
Yes.
So you have the low volume node coinciding with the value area low, coinciding with this is free
The
money.
buyers.
This is fucking free money. You wait for this candle, you put the stop loss here, you target either, because even if you want to target, let's say here, okay? You are risking per contract $160. In the worst case scenario, if you want to be out really fast, you are risking 160 to make 500.
Yeah.
Okay? So the risk to reward, it's more than 1 to 3 in this case. But this is the excursion the market gives you. So you see how the risk to reward can get really huge if you get in tune in the market.
Yes.
And the addition to the position can be done every time that the markets create a new high. This failed auction, it doesn't break out, but then it break out here. Okay.
To there, yeah.
Again, look, zero volume here. Like from the profile, punching the wall, I will not get this trade because I don't have aggression. So it's not as safe as this one.
Yeah.
But again, the bias is completely fine. And this is the both of the model. We saw the reversion model and the trend following model. And the first time that I find out this myself was a haha moment.
Yes.
Because I just went to order flow and say, so I can see before it happens how the volume is developing. And also, small exercise, when the market gets taken back in control by sellers, all this small volume, then huge aggression from sellers, but look also where the market reacts when it comes back. What is doing now? This is actual price action. We are not charting the past.
Yeah.
Sellers in control, where they will find the first problem when they get back to these aggressive buyers. Otherwise, they will continue to push the market down in this case. And when you see this case, it can be a punch on the wall because sellers try to push it down, but buyers protect the level. And if you see it closely, what is developing is a trend following condition, because we are going after all this balance, we are going out of balance. This is the first breakout.
Yeah.
And they can go back to the previous point of control. So they have a long room to go here. And you will notice, I don't know if it will happen live, that if this level get tapped back, it accelerates.
Yeah.
Because sellers are adding to their position. For now, it is out of balance print and is going to rebalance to the POC because it was not a successful breakout.
Yes.
That's the reason I say always trend following or reversal. Wait for the second drive. Don't take the first drive because you can get tapping in a fake out.
Yeah.
That's it. It's not difficult. I know it's a lot of information for the audience for the first time, but
I think it's a lot cleaner than some of the order flow breakdowns I've seen before.
They just make it hard to not let people understand.
I mean, different platforms as well, can make it like, so in this case with the, what we would call the bubbles, for example, but in terms of execution, there's large orders.
Yes.
So have you filtered it so that it only shows specific size of orders?
Exactly, specific size.
And then you can take it on and off as well.
You want to filter out the noise, no? You want to see what actual big orders are doing. Is the same concept as commitment of traders for long term.
Yes, yeah.
You are just watching the participants that matter. If you move one contract in many, I'm not interested in you. Just you can do what the fuck you want, but if someone is adding 100 contract on Nasdaq on 1 minute, it's interesting. Like the momentum is.
In terms of price getting to this point, this high that we were talking about here, because as we were talking about potential trades from down here,
yes.
What is there anything to the left as to why price is reacting at this area? I think there's a high to the left that we were originally looking at.
You want to see where we are going
Like, is there anything of significance in this area
Let's
that
watch.
would lead
Okay.
you?
We don't need to guess.
Mhm.
Okay. So let's remove this part so we don't know exactly where it was. Let's print it. And let's go down here. Okay.
Mhm.
Now let's clean all the noise. And let's go down here. Okay. As you can see, in all this area, the value area I is this one. So I will make white the value area I. So this is when the market, considering all the profile,
Mhm.
the comprehensive profile also of the gap, is when it's getting expensive for market participants.
Yeah.
Okay. But if we get deeper, we notice that the biggest peak of sellers, you see this one.
Yeah.
Okay. So this level can be something interesting from sellers perspective wise. The market reacted from this value area, is distributing, and as I was saying to you, probably is going back to the POC. That is this level, and it's exactly overlapping with the big volume trades.
Yes.
So the probability of a follow-up short, now it's higher in this case, even if they get before back to the POC and then redistribute back down. But I want to show you also here from this profile. Was it understandable that this was the reaction level from the delta that is developing?
Yeah.
Yes, because this supply is the real way of plotting supply. You are just watching volume-wise when there is the most amount of executed trades, not limit, but executed trades. This means that the auction get too much expensive.
Yeah.
They want to sell off in this case. And they sell off till here. Then what happened here exactly is that the price get too low to sell because it's getting cheap again to buy also for buyers, you know? So from this perspective, we have this. Buyers trying to aggressive, no follow-up. Sellers, no follow-up. So we are getting inside the decision range. The first one that will get breakout, you will see a catalyst in that direction. And probably the first level is this one.
Because even in this case, for example, if this was to break the high, even though we might not be looking to trade this, but if we were looking to make a prediction, would we then break the high and then look to go to the high of the value area potentially, or even the previous?
I will say the POC.
POC first.
Like distribute against the POC. And then if you need to refine an area where you can probably see a reaction, I will say this supply here, like you were saying. Not because it's the best level to react, because the best level to react is the value area high, but because this delta here, it's really reliable on how much aggression is it giving.
Hey guys, so we've had obviously the biggest nightmare you can imagine on Chart Fanatics. As you saw there, we were middle of screen recording, storage issue, screen recording cut. We cut, no problem. We came back. We pressed screen record, but something happened. However, what we're going to do to make up for it, one, we're going to break down exactly what happened step by step after the fact, no problem. But we're going to actually wait until New York open, and then we're going to do back. I promised you, New York session, we are 30 minutes before, just under 30 minutes before the session open. We can recap exactly what happened since we left as well. And super excited for this. First time ever. I don't think I've ever seen a video where it's done this, where it's educational, showing the concepts, but then actually trading it live thereafter and, you know, calling out price essentially. I'm very excited. No one better than, of course, with Fabio.
Yes.
Do you want to win 7 figures in challenges without having to do anything at all? Seems too good to be true, right? Well, at propfirmtrader.com, that is exactly what is possible. You are buying prop firm challenges anyway. Well, at propfirmtrader.com, not only will you get the best prices and be able to compare your prop firm challenges, but by automatically using the code PFT, you automatically get entered into this weekly giveaway where you can win over 7 figures in challenges. All your favorite prop firms are on propfirmtrader.com, just like broker-backed prop firm Atmos Funded, backed by Torex. The fact that they are broker-backed means that you have stability and security when it comes to your payout. Once your payouts are approved, traders are receiving them in less than 5 minutes. They have instant funding, 1-step accounts, and 2-step accounts, meaning that whatever type of challenge you prefer, they have one for you. Thousands of traders over the last couple months have joined Atmos Funded, and over $200,000 has been paid out in just the last 6 weeks alone. You can get massive discounts on their 50 to 200k accounts and even bigger discounts on their 5 to 25k accounts. Use the code PFT on screen right now. But not only do we have Atmos, we also of course have Apex Trader Funding, the largest futures firm in the entire industry, with up to 90% off using the code PFT, up to 20 accounts, and up to 6 million in futures funding. You can also find Alpha Capital, who also have 1-step challenges, 2-step challenges, and 3-step challenges just for you. So no matter what type of challenge you prefer, they have an option. And not only that, we have Funded Next, one of the top 3 CFD firms in the industry, and again, an exclusive offer through PFT. Check it out on screen. The link for propfirmtrader.com is in the description below, so make sure you check that out. And remember, use code PFT at checkout at all your favorite firms and automatically be entered into the massive 7-figure giveaway every single week. Now let's get back into the episode.
So we are here, we are stuck in a range, we are on fair value. Before we treats to do a recap, we saw this punch to the wall, the aggression of the seller, the follow-up to the balance area, and now there is the first piece of information that we can get that was not present before, is this punch of aggressive sellers without follow-up, getting to the discount level, getting back inside the range. So I think, as I was saying before, that this high for the day, it's something that will get destroyed probably at the beginning of the market open, because the structure that I see now, even if I have the information that sellers are getting aggressive and building up here, the structure of the market that we never need to forget is still bullish. And as you can see, this is the level where the majority of aggression is getting. This is the level where sellers are getting really aggressive. There is a dry up of volume, and as you can see, a low volume node.
Yeah.
This is exactly what the market printed here. So in 20 minutes, we have the first setup probably that can either be breakout here, breakout and test if the volume is supporting it. Otherwise, we can get a buy from the discount, but this will be more risky. From here, you can see that they are starting to fight. The price is going down. So they are winning the battle, but we need to remember that we have these big boys here ready to protect the price. So at the moment, I don't feel confident to check any setup. I prefer that we check closely. We should expect the first drive not at market opening, but 5 minutes before. And people that trade will see it often. Like they are preparing the dealing range, testing on the market opening, and then getting the real direction. So what I expect is that if we are going to get really long, this high needs to be taken before 20 minutes. So I mark this high.
If we're going to get long.
If we're going to get long. Now, I will create some scenario that are all rule-based.
Okay.
So let's remove this one. And let's make some scenarios. So the first scenario is that these sellers are going to get absorbed.
Okay.
Now, if these sellers are short here, probably they are going to get liquidated here. If the price during market opening spike up really hard, they are forced to close their position. Closing a sell will create more momentum long.
Okay.
Watching how much they are pushing short makes me think that they are either closing long position from here, either they are getting some scalp pre-market opening, and price will get back to this level, 21,822, before skyrocketing long. If we need to be conservative, it's the only setup is breakout here, test the level. Only when you have a closure of the candle, we go back to 1 minute. So we get the real execution, and the market now will prepare the setup for the market session open. So aggressive sellers, this can be seen also at what traders call fake out. So the fake move before the opening and then collapsing, not collapsing, but rising up. And as you can see, let's make a comparison. The size of the ball, the red ball, it's bigger, right? But the result is really bigger. Like with small volumes, buyers are getting better results, if you see here. So it's really important to see, to plot, this is something that I do often, to plot a profile from the first ball to the last ball, okay, like this, and check who is going out I show you. We can always hide the trades. So you have only raw price action and volume distribution, and you can see the sellers are not yet managing to close their candle below the value area low. So we are still, even in a small time frame and a small data range, we are still consolidating and compressing.
Yeah.
The direction of the market is not clear at the moment. And usually it gets really clear, the direction for the day, from 15 minutes to 30 minutes inside the opening of the session.
Gotcha.
So it's normal. It's totally normal what's happening. Now they are loading position. Now, this one, it's already a big information for me. If this candle stays like this and we take this high, you can also try the aggressive setup, but we will only use the model that I explained before. We will not, because people can get confused with too much information. So let's go easy. But as you can see, they put aggressive sellers here, but the follow-up it's almost zero. Why? Because again, the buyers are protecting this position.
Yeah.
And in the overall bias, if you see what's happening at the moment is that from the previous range of compression, the market tried to break out, but it failed. So structure-wise, we are still long. Now, let's remove all the unnecessary data and let's put the big trades.
And one thing you mentioned was that those big trades, previously when we were looking at the charts, there wasn't that many because we weren't in session yet. The session hadn't begun.
Now it's getting huge.
And you said, like, when we're in New York session, you're going to see it like so much, and we're not even in the session just yet, but you can already see an increase.
You know what I like about these tools and this platform, that volume is balls are proportional to volume. So when there is too much volume and not clear direction, your market gets flooded by balls. So it's not visible, the price, and you are forced to stay out because you cannot see what's happening behind. So it's like an insurance on your hand to stay calm, like to not do anything. And what I would really love, and my favorite setup possible, is when market explodes, following up by green level, and you can just jump in at the first level when it pulls back in a low volume node. This is amazing. Now, this is totally normal. And this is the reason I strongly advise not to trade like 10 minutes before the session, 20 minutes before the session, because you will be liquidated and then maybe your direction was right. But you will be fucked up by volatility. This is something that not all traders take into account. The volatility range can change by session. So a model that works for London session, it's not guaranteed that will continue to create alpha and generate revenue in the New York session. An example of this is the mean reversion model. You will see now, if we apply mean reversion model here, we will get destroyed by market. And you will get also slippage because it's normal. It's compressing here. Still, the entity of the sellers is huge, but there is no follow-up. What does it mean? That someone is absorbing this order. And if they are absorbing this order, if you watch only color, you say, it's controlled by sellers. But I still have my narrative long. I still think that we are going to get the high for the day. Momentum is building up. We are getting around 10 minutes, 13 minutes before the session. And as I told you, we are
so you would expect that high to take?
To target the design. Now, what can we expect when we target this high? Explosion, like acceleration, like we were seeing before. Why? Because these huge orders are getting close. They don't want to be before session with this heavy and being in the wrong direction. So they tried to anticipate the fall down of price, but as you can see, it's not going really good for them. So we are going to see when the market approach exactly this high. As of now, still not getting broken. What we want to see is these green balls here, like we did in all the previous situations. This is a good setup for follow-up. Aggressive setup, if we want to cover everything, one aggressive setup can be the anticipation on the first ball with a stop loss below the sellers to get to the high. But it's a setup that you are still trading the noise. So something that you cannot expect will have the same win rate of a good frame trend following setup. So you see, when you get back inside the range, the balls are so big that you cannot even see what's happening.
Mm-hmm.
And this is keeping you away from interacting with the market, like transactioning.
In terms of like what parameters, if any, or settings have you put to identify these large orders? Is there specific?
Yes. For the 5 minutes and 1 minute for New York session, you can use 30 contract as a filter, 30 contract. And during London session, you can go with 20. Okay. It's pretty accurate like this. And
so the larger it is, does that mean it's more than 30?
The more, maybe these are 100 contracts.
Got you.
Like so big. And I created like this proportional so you don't need to click on it, see how much contract, but you immediately see that there is a big sell aggression there.
Got you.
Like it's, see, sell, I was expecting that the buy would, but sellers, so they are still keeping here. Why before session they are still keeping here? Because the direction is not clear. Who want to transaction here when you can get whip side high, whip side low, you're out of the market. Like, you are getting liquidated with every direction. So,
and these buyers or sellers, they can be anyone, right? They could be, a retail trader with large capital, or it could be your funds or whatever it may be.
Exactly. Now, an information that we cannot unsee is that at the eye, they are still loading short, even if the market is going to push the eye. So the narrative is a little bit shifting, because if this low gets taken, we have this breakout, is interesting. Also, the short till here. Why I will not take this position? Because the whole picture is long. So why should I take 1-to-1 risk to reward when I can wait and get a 1-to-3, 1-to-4, 1-to-5? This is the model we need to use, and the model is keeping you out of a lot of trades. Like, we need to be evidence-based and oriented on a large number of sample. Executing 2,500 sample in a World Cup can give you the taste of what's worth to do and what's not worth to do, because maybe 1 times out of 10 now we go short, but all the other times the seller are getting destroyed and the test is here, and you just lose to get a so small movement. That's
because I think that's one thing that's universal across any trading strategy, is that you focus on quality, rather than just anything that could work, or this has a chance of working and it could work 1 out of 10 times, whatever it may be. Because I feel like that one time you do take it, it does work, it always just reinforces you the next time to take it again, right? Take it again. And, it might work 2-3 times if you're lucky, and then the next 20-30 times it's not going to work, but you're still thinking on those 2 or 3 times it does.
Exactly.
Versus when you have an actual plan, quality trade playbooks, and you follow those playbooks, that's where your consistency will come from, your longevity will come from as a trader. That's where you're really going to start to scale your journey. And scale your journey doesn't mean that it's going to happen fast, but what it means is you will have progress. And the funny thing is, it will happen faster than the alternative of
the slowest road is the fastest road. So it's always like this. Now, what I'm doing in pre-session is marking up the biggest delta volume. So I want to know.
So delta volume's on the left, right?
Yes. I want to see at the market opening which level I can see that are getting tapped. I want to use different colors, so I will use just deep red for this one. And for the buy part, I take the swing from the low, and I see what's the level with most amount of volume. That clearly is this cluster of buy volume. To be honest, there is also this one is smaller, but it's still here. And these are the level that we can see in 7 minutes getting visit. And from here, we already know what to expect, when to expect it.
So do you sit on the 5-minute time frame when marking out your analysis? When it comes to execution-wise?
1 minute.
1 minute,
Yes, it's clearly like this. Now, chart is only showing us the levels. Color, we can see the aggression, and we can see the actual execution. So now we don't need 5 minutes anymore. We can just go down to 1 minute. can zoom in. You see how much they are big when you go here. You can see clearly that this aggression at the moment is getting completely absorbed.
Yeah.
This got absorbed.
Do you ever think, like, for example, in this case, this person tried to sell, got absorbed? Could that be the same person, like, stacking into a trade, or is that not sort of how we go about it?
You cannot know if it's the same operator, but for sure you know that these traders are in drawdown, and there is still interest in the sellers. So what I can see is that they are trying to build a sell position, and they will be forced to close if market volatility spikes.
Gotcha.
So if I get these aggressive buyers and all these sellers needs to close the position, we arrive here in market opening. And we are close because it's 324. This is the first moment I would expect.
And so in this case, if price did break above this level, you're not interested in trading that to the next level.
No.
You're interested once price gets to that level.
Exactly.
Okay.
Exactly. Because I need to see...
But would you say it's still important, to have this context? Even if you're not looking to trade to that next level, it's still important to understand what's going on.
Because you are training for the precession and creating a narrative. So when you know how to do it, you are still understanding with your subconscious mind what's happening, because you need to be really fast.
Yeah.
And you need to reason fast. And if you don't do it and you do only for your setup, on 15 seconds and 1 minute, it's not enough fast to then execute at the right moment.
Yeah.
You see how much volume and interaction is starting 5 minutes before, like I told you, not at 30, 5 minutes before they are preparing the order. From what we can see here, this is a huge information. Aggressive sellers still to this level, buyers with better results. All these are getting absorbed. This is not my narrative getting wasted. No, this is my narrative getting confirmed. So even more, I should expect now that either from here or either from here, we reaccumulate in the last 5 minutes and we shoot up. All these sellers are in pain, create an expansion move up.
Okay.
Like one setup with high win rate, but under not limits. Like I never watch limits. Like you can get to feel a taste of the market, but
because the limits apparently they can
cancel.
Yeah, they cancel. So what do they call it? Spoofing, is it? Is that what?
Yeah, they call spoofing, like putting order to create market pressure, then removing. It's manipulating the perception of other market participants. But with execution, just these are executed market. There is someone that is with huge self.
You know that's in the market.
You know that's there. If it close, you see it.
Yeah,
you see it. So in this case, so in the first minute of market opening, you will not see the chart.
It gets
balls. It will get like something like this.
Does this large aggressive buyer that failed up here? Does that make you?
Yeah, you are getting good. This is an aggressive buyers that created a failed auction. So the buyers here got, like, they tried really hard like this, but the sellers won here.
Yeah.
In this battle, also the sellers won.
Okay.
Because they are transactioning down.
Yeah.
So that's the reason you wait for your confirmation and you don't jump here. Because even if the bias is long, you don't know if they will reach here or the second level that you tracked. I only know that I want to be in if this level gets broken.
Yeah.
So let's see what they do. 3 minutes before, a setup for a scalp position, a little bit more risky, is if these sellers don't have a follow-up and got absorbed by buyers. Shooting up here, but this is a risky position. But this can be, I show you only to give to the audience a taste. This one, like risking $300 and getting 1,100 is not a stupid position. It's just a position that you are taking inside the noise.
Yeah.
I can take this kind of position only if I'm sitting in profit for the day.
Okay.
Like it's not uncommon that I take them, but I need to use profit and not use market account equity.
Yeah.
Because
using house money, right?
Yeah.
Yeah.
Like before I need to take money from the market, then I can take this kind of trades. The win rate is lower on this, but if you consider the risk to reward, it's like 1 to 4.
Yeah.
So it's pretty good. I just put this risk to reward because I want to let you understand that if these sellers fail, they will catalyze up.
Yeah.
Oh, I need the first minute. If this one gets broken, the setup is not valid. But if in market open at 3:30 you recover this level,
Yeah.
like, and this one gets not broken, this is the target. So let's see how the market will behave. From what we are seeing at the moment, sellers won.
Yep.
Sellers won, buyers won.
Yeah.
Here. So you are getting a bias and a level that start to get interesting. Let's zoom in. It's not visible. So considering the platform, you should not interact in this position even before, because
You can't see.
you cannot see what's happening here. Because the first execution can be taken after market open, and we are still before. So one trigger can be the break of this eye, for example, for a long. So now that we are getting inside, if this eye gets broken, a really aggressive position can be entering at the break of this with the stop loss here, targeting the high. And I think it's even more than, as a risk to reward, even more than 1 to 4. It's 1 to 5 probably. So market is opening, they didn't break the high. So no position gets executed at the moment. Now we are in the second buy area.
Yeah.
So we need to check how the volume is behaving at the moment. Now these traders are in profit.
Yes.
All these buyers that position themselves before the opening needs to close. Now that we are in market opening, we can start to take position or do analysis that we can actually use. So let's see. The first information that we have is that sellers still won this battle at the moment, and they are getting stopped only here. Okay? So still in the noise, remember our rules. Till we don't get here, the premium setup is not executed.
Yep.
So inside here, what can be something interesting for us? The first information that we can have is sellers really aggressive here that don't have a follow-up short.
Yeah.
So if this candle start to get populated by a lot of sellers, but get back here, this can be a long. But again, it's a long that you take inside market ranging. So let's just wait here.
Because you have a level beneath this, right? And towards the low.
I think the main level of the buyers are getting destroyed.
Yeah.
So the only reason I can engage in a risky position here is if this one prove me that it's a fake out. How can they prove me that it's a fake out? They need to recover all this.
Yeah.
This one needs to be a full week and they need to break up again from this high. If they don't do this, you see, sellers are completely dominating this market at the moment. So not engaging here. You know, in price action, you can try this long because you don't see this. So you think,
exactly.
Hey, it's retracing. I can buy discount. No,
you're hoping like break and retest the level.
You know, this is something that if you are a price action trader, you cannot know, not because you are not good, but because you don't see that they are willing to sell stronger at lower point.
Yeah.
So the auction is getting short. Which one is the first level we can protect? We need to go with the profile on everything they build also during London session, not only during the range. This big area and this low volume node, like also Carmine is doing. This is a low volume node and this is the delta.
Yep.
This is the last protection level. If this one is breaking, they are recovering this cell and they are collapsing. And this exactly.
And in that scenario, what would you do? Would you just then wait?
In the scenario that they get sell, my narrative will change because they break a balance level, not on the up, on the downside.
Okay.
So my day is short.
Yep.
If my day is short, I will still use the same model. Just I will not get long, I will get short.
Gotcha.
Like my long day gets activated if we break this.
Yep.
My short day at the same time gets activated if we break the compression range, that is all this range. If they arrive here, we can try something. But here, there is something that is undeniable. They are on this level, they are pushing hard, but I don't see a lot of follow-up short.
Yeah.
So here the buyers, you see how many volumes?
So much, yeah.
Here the buyers are protecting it, limit orders. So either they slice through it, but if they start to recover and they get back inside the range, this is a setup that also Patrick Neal is using with volume. And you see the good part about volume is keeping you up. It's keeping you out of the market when it's not ready. Here. Because let's go again to the narrative. Here, if it breaks the low, we get long. It continue down. Okay. Here, if it breaks the high, we can go here. Why? Because if the volume don't does this means that the sellers are controlling all this market movement.
Yeah.
You don't need to predict. Just need to see what's happening. Here is the first time for the market opening where buyers are protecting a level.
Yeah.
In an interesting situation. So this one can be the first long position if it gets confirmed by a little bit of buy aggression. At the moment, it's only sell.
Yeah.
The moment it's only sell. So now the only thing to do is wait what they can do. Now, one position that gets really interesting is the squeeze of the trapped sellers. When is the squeeze of the trapped sellers? When you recover all the aggressive sellers, they are getting fake out. So they are willing to close the position and the market is accelerating high, you know? Let's see what is happening here. This is the first footprint of long position from the level that we saw. Still, someone can think, why you don't take a long position here? Because at the moment, if you see who created the swing, like we were talking before, it's completely dominated by sellers.
Yeah.
This is a really risky position. If we start to get back here, we can take a position on the breakout with stop loss below the level. But remember, the model is one. You need to break and test this level. Otherwise, you just stay out. When this level gets broken, the game starts. You can add the position, you can follow up, you can do a lot of things. Now, I want to show you how much it's useful to see this volume in higher time frame. Like 5 minutes. From here, it's clear. It's clear because you see, we agree that this is the low volume node, okay? The profile distribution achieved the value area low. Okay, so we are on the value area low. The sellers didn't got a follow through. They took the low. Okay, and created a failed auction. People call this manipulation. They try to break out and they failed. This is the reason we will get here.
Well, it's what you said. Before the open, it's going to set up, and then it will whipsaw, take out one side.
This is a model. Like the only thing is that I don't get inside when they are like so aggressive. So my role is not to predict when they will stop. I just wait that they complete this movement. You see, all this was a fake. The narrative is still buy. All this movement gets absorbed. When we switch the narrative, when we break this level, we broke this level. No, so we are still buy. If you want to clear the position and for the New York session get a better tune of the market, you can raise to 40.
At the contract size.
The contract. And you will, the situation will be a lot clearer. You see?
Yeah.
Situation now it's clear. Buyers got more than 40 contract here. They are just putting a lock and say, below this level, you don't go. Like, you try to sell with 2, I absorbed everything, and they are recovering all the buy. Now, all these sellers need to close the position.
Which then causes a squeeze.
Like, if all these sellers close the position, the market is jumping, and when it gets to this level, you see the acceleration that we saw before but short. Like the opposite. In the video that I made with Andrea, all the setup that I took are based on this model, like squeezing the other part to get the acceleration and be immediately break even. Be able to move at break even really fast.
Would you say that is one of the necessary skill sets when scalping at this level?
Yes, like being fast and also creating shortcut on your platform.
Would you say that you always have been been able to move at speed as a trader, or is that something you had to train?
No, we are human reads. I will be really honest. Sometimes I made big errors, like you scale inside the position but you scale. You don't notice that you are scaling not by one mini contract at a time, but we are scaling with 5 contracts. There is a huge amount on Nasdaq. Like one contract is really heavy, and you need to find a good way to scale out, and you are with tachycardia. Like in scalping, you need to be fast, and sometimes you still make errors.
Yeah. Because a lot of the time there'll be human errors at that point, right?
Yeah,
Just little
and
micro-
then with this volatility, look what the market did. As I told you before, taking the high, first 10 minutes of the session, we didn't do anything. We just liquidated the low, liquidated the high.
Yeah.
That's the reason you don't engage before. Now I want to show you, these sellers are selling this momentum with 0 results. Now we are getting back to this. When we get back to this, someone will need to cover their position.
Yeah.
When they need to cover the position, the momentum will start to build up. So let's see what they do. Still, my narrative didn't change. The only thing that could change my narrative is the breakout of the level. Still compressed inside here. And we recovered also the major delta point here. This means that we are above the strong selling level of the distribution. And if we are above here, we are also above the value area high. And you remember before the reaction that the market had on the value area low.
Yeah.
Like he completely used this as a pivot before collapsing down.
Yeah.
The same is for up. Like there is an overlap of this area. And now I think they are...
So aggressive, if you wanted to be aggressive, these are, this was a trade at the low you could have taken. But again, it's like
not wrong, but
super aggressive during that time window that really isn't ideal.
This one, you should not expect more than 40% win rate. So you can take it. But remember, you are trying to take a falling knife.
Yeah.
A lot of times you will get cut and you are buying the contrarian momentum. So you are trying to stop the price with the big market participants. After a lot of tests and here, it's more easy to who is winning the battle. If this low gets broken, sellers are winning. If this high gets broken, buyers are winning the battle. Okay, now you know who won the battle. Now you can engage.
Yeah.
Don't try to anticipate. This is the main reason why a lot of traders lose money. They try to anticipate what the market is doing before the market does it.
Yeah.
And they get so attached to their narrative that they are not willing to change. As I told you, my narrative was long from the beginning. The market did an aggressive sell-off. I was ready to change my narrative and say, from this moment, if it breaks, I start to search for short.
Okay.
I'm not marrying my position. I don't care.
But you have specific levels that invalidate your bias.
Yes.
Getting excited.
It's not so big, the volatility today, to be honest. We are on the 5 minutes. I think they are waiting if there is a news of the other bombing because...
Yeah, so for context, over the weekend, today's Monday, over the weekend, the US had bombed Iran in 3 different sites. We gapped, I believe, lower on NQ. This is NQ, right? So we gapped lower.
We recovered the gap.
We recovered the gap, which we then started recording earlier. We then actually sold off and then recovered again. So we're kind of in a range at this current stage.
The squeeze gets completed here.
Yeah.
Like if they attack this high, these sellers, and all these are squeezed.
Yeah.
So here we can expect.
So it would be similar to what we were looking at over here and over here.
We saw this here. We saw this here. And they build momentum. Now, the squeeze that you see in London, it's
much less. Yeah. Less volatility.
The squeeze that you can see here is 3 times this candle.
Yeah.
It's
already
pretty aggressive.
Mm-hmm. And what is it that you do when you are, active? Like say, it's in a different setting, we're recording and everything, even though you're going through the same motions. But when you are waiting for these 10, 15, for the price to get to the right areas for you, do you still sit and watch? Or do you have it up, maybe some alerts, and you're doing other things?
You can put alert on levels. Now, considering that I don't want to transact inside here, my first alert will be here. So just here.
Yeah. So the first alert would be on.
Otherwise, you get the temptation.
Yeah. Like I've been thinking, how is he controlling himself? Yeah.
The temptation to get, because here it was really clear that the auction was failing.
Yeah.
A lot of aggression and no follow-up, but it's not your model. Like you are trying to put some intuition inside the model that is already proven to make money.
Yes.
And
would you say that when you first started learning and to really look at the market in this way, would you say that you fall guilty sometimes in the beginning of, as you said, trying to use intuition and trying to maybe over predict and over trade almost, because you feel like, okay, I can see these sellers or I can see these buyers, and you start taking executions outside of your model.
Yes, of course. You know the Dunning-Kruger effect.
Mm-hmm.
When you introduce in your mind a new concept, you think you understood everything. Like, if I introduce now order flow to a price action trader, you will say, oh, it's so easy.
Yeah.
Like, there are balls, I take. There are no balls, I don't take. No, it's not like this. So in the beginning, when I introduced it, and my model was this, and they see aggression and not follow up, even if the model is not completed and it's not, I say, but why? It's free money. I jump in, and then I say, when you journal, you understand the error that you did. So when your mind is cold, you understand what's the real error, not before.
Yeah.
They are starting to squeeze, you see? They try to break out the eye, a lot of buyers' aggression, but the sellers still are pushing down limit orders, like punch on the wall from the buyers. Yeah. But the fact that they already reached the eye, it means that the sellers are not protecting the level anymore.
So, for example, let's say if we, at this point, we see buyers, let's say we don't close above, is our likely scenario from here probably to get to here? And then see again if buyers or sellers win at that level?
Yes. Why? Because this is the level of protection.
Yeah.
And the candle is still not closed, so these are still building position. But if you start to see rejection, this is a level that you can revisit. Now, the point is that if you enter here, where you put your stop loss, because you see how much is big this candle.
Yeah.
If you want to be safe, you will put your stop loss here. It's not worth it.
Yeah. Course.
Like it's that's what I was saying. When volatility expands, you need to make a lot of consideration that you are not making in London session, because one candle in London session you can go short here and protect you here, and it's okay.
Yeah.
Look here, you need to protect here. It's not worth.
Yeah.
It's just not worth the trade.
And yet traders will still take it.
Yeah.
Because of that, as you say, that trying to predict or try and say, okay, this is what's going to happen.
It's broken. Yes. Okay. I engage. I can start to engage to go here if I have some profit for the day.
Yeah.
Otherwise,
not worth it.
This level. Let's we stop here. But you see this buy here, getting no follow through.
Yep.
Some trader that is getting new at order flow can say, maybe I can try a short from here to here. Okay, where you put your stop loss?
Exactly.
Here. Is it worth it? No. Completely no. You are risking more than you are expected to.
Exactly. In terms of a position at the high, you know, the one that we're waiting for and looking for, price breaks above, we do our confirmation, we get in. Do you already have a preset target in mind? Or is it something that will depend on once we've broken?
So the first target is the one with the highest win rate. It's the previous daily high.
Okay.
So if the previous daily high was above, we can go to check him. Now, let's check here because they are building.
They're building, yeah.
And they are preparing the squeeze. Like as you can see, it's the first time that a candle can accept here. Now, if this was happening here, this is a trade. It's happening inside. So still, if they accept here, this is a break and retest. This is a real break and retest model. Like covering yourself below the aggression and going to the next level. And it's still 1 to 3, 1 to 4 risk to reward ratio. Okay. You see how much is different watching only candle and watching the momentum that created this candle to break out.
Yeah.
Like, to trade break and retest, you need to protect yourself.
Yeah.
And the first target that makes sense is the level that we considered before. We are not reinventing the wheel. Now, considering that we still didn't reach the high, I can go here and mark up the previous daily high. We have a lot of room, you see? If this is the first target, a huge risk to reward. If it breaks here and tests, it's 1 to 10. 1 to 20. Now, sellers trying to step
back in, failing,
failing. So let's recap what happened. The narrative was long from the beginning.
Yeah.
Before getting us the opportunity to be right, the market took the low. Why? He revisit deep discount area. Then he validated the first level of squeeze. A good squeeze is when you approach the level and you see aggression, and at the same time you see follow-up from price. This is a good squeeze.
Yeah.
These sellers are forced to close position here. And what they will create? More and more momentum.
Yeah.
Okay.
When price did come down here, because obviously we're recording this and we're live, and what are your thoughts? Like, what's going through your head? Do you feel when price is down here? Like, oh, you know, I
was thinking, I was thinking, to be honest, that you will break the law, and I was already preparing my mind for the narrative to be short for the day.
Okay.
I only start to change my mind when all these sell bubbles pop in with this buy.
Yeah.
And I see that all these have zero effort.
But that one buy.
So I traced this and I validated this is a low volume node. It means that there is not a lot of transaction here. The first transaction is this level where there is a huge delta on buy volume.
Yeah.
This is exactly what stopped price. This bunch of information, profile, low volume node, aggression, and lock-in from buyers is something that can validate. But as I told you, I never told you I will go long from here.
Yeah.
Because it's just too risky. Like you can get low. Now, this one was the only position that I told you. If you are a breakout trader and you want to take, you can take this position and just trail your stop below your bubbles. Okay. And take
If
some
you were
profit.
to buy there, where would your stop be? Under the candle low?
If you want to buy here, your stop loss can be below the aggression.
Okay.
So it's really aggressive. Like, let's say that the market just tests this movement, okay? And your stop loss can be below the big orders.
Yeah.
So it's a stop loss of $200 to make 600. It's not bad.
Yeah.
But it's still a position created by market noise.
Yes.
It's still not my setup.
Still in the ranges.
For sure, there will be some order flow trader that is profitable doing this.
Yeah.
But I will never do this because the probability that the market with the volatility of New York session will get back here and do this movement and create just a wick. Then you are right on your position, but maybe it creates a wick is really high.
Yeah.
So in this case, we were lucky. It fell to the pip, it rejected, and if this breaks the low, we are already zero risk.
Exactly.
So you are fast. You are really reasonably fast. But if I had to advise to a friend, would I use this model? No, because it's out of stress. Imagine that in 1 minute, in 5 minutes, you have to trail on the next block. You need to be really fast. Imagine risking $5,000 on the position.
Very true, yeah.
You need gut. But when the range of the New York session is clear and you have a breakout of the compression, you have data supporting this to the point that there are a lot of studies about initial breakout. Like, the model initial breakout when New York American equities break out the low or the high of the New York opening, there is a huge probability that they will continue. So I'm using a structural inefficiency of the market, just timing it better than usual traders because I have order flow. But I'm not reinventing the wheel.
Of course. Yeah.
There's nothing exceptional about it. And it's the fourth time that in this timeline we come back to the level that I told you and we still reject. Sellers, zero result. Buyers, aggressive, new auction. If it breaks this low, risk zero.
Yeah.
Like,
it's incredible to witness. Now, what do you think to the term or statement that people make in terms of buy low, sell high? Because in this case, what we're
buy low, sell high. It's I'm totally opposite to it.
That's what I'm thinking. Because I was thinking, like, at the low there, where I would look at, and I'm sure a lot of other people would be like, oh, so if we're long, that would be a great place to buy. But as you say, that yes, you could, but on the most chances.
No, wait, you can do it if you are like, if you know the fair value of the asset. Like if I would be doing this for a car that I already know the market price, that is stable, the market price, I can buy low and create my business around it. But market, there is not too high of a price for one asset.
Yes.
Because the asset price change constantly, So it's buy low compared to what?
Exactly.
Low compared to option flow, it makes sense. Low compared to order flow, there is no low. You are buying high. I will never sell this movement. You see what it's doing now? This one, it's already zero risk.
Yeah.
Okay, some minutes. Now it's starting to get interesting for sellers because we are reaching the level that we mark out 4 hours ago and is still holding.
What would you expect? Would you expect price to, or would you want price to break through aggressively, or would you actually not mind if price reaches the level, sells off a bit, and then breaks thereafter? What's like the prime, like the ideal
I
scenario?
expect the sellers to get destroyed. As what I told you from the beginning, I expect aggressive market participant to step in as soon as we reach this high. A little bit of pullback, and then going aggressive. As I told you, by the first 15 to 20 minutes of the session, the direction is clear, and it's exactly 20 minutes. For me, the direction is clear.
Yeah.
First position was breakout trades to get the high, but you are still in line with statistic distribution. Why? Because you are getting a movement when a level gets broken, supported by volume, and you are getting out your position before the level.
Yes.
So you are not trying to, you see, if we keep the target to the high, it's already rejecting. Maybe now it does a whipsaw and then explodes.
Exactly. Well, it's amazing to see, especially for the fact that, okay, we didn't take this position because didn't fit the playbook.
Didn't fit the playbook.
We don't have the house money from trading earlier, for example, to take the risk.
Yes.
And that's, I think, so important to highlight, because a lot of traders out there think you have a bias. Anything that fits that bias, you take. So in this case, for example, you let's say you came in long, and you would take a long. You try to take a long at the low there. You try and take a long there. You try any long that's possible. You try and take. Right? In reality, you have your playbook. It doesn't matter what your bias is, as long as that playbook hasn't presented itself. You do nothing. Right? You sit on your hands.
I think they will get a lot of value from concept-wise from these trades, because this is explaining exactly.
It was beautiful.
The market moves.
Yeah. Because even that, I would say that it's not the worst trade in the world, right? It's with the bias.
It's 1 to 3 in 3 minutes. Like, it's worth it. Just
depends on your playbook. Yeah. So it depends on your playbook. That's what I'm saying, though. It's incredible to be able to see. Okay, we had a bias. Here's a trade opportunity. It played out beautifully, even with the explanation as well in real time, which is most important. It's phenomenal to see, and we're excited to see how we continue to push through.
Now, what we should expect here is revisiting this area. Why?
Okay.
Aggressive buyers
failed,
not holding, failed. We knew we placed our target exactly where we should expect a reaction. Now, there are 2 questions. First question is, how much deep will be this retracement?
Yeah.
Second question is, we want to be in a long position. If we get back here, no. Why? Because it's still not clear the dealing range.
Yeah.
Till these big boys don't fail and says, because the good edge is that if these big boys gets broken, this needs to close position. And if all this dealing range is getting in suffer, we are skyrocketing high. And you will say, how is it possible that we are skyrocketing high if we have a situation like this from global macro perspective? That's the good part about order flow. The market already includes all the information possible. You need to read what the market is telling you. There is no better mentor than market.
So is it the case normally then? So we'll see at this point, this is a previous auction where sellers had won. And in this case, because we've seen buyers try to step in, fail, get absorbed, we then would expect the previous auction to be revisited to see who's going to win that battle. And essentially, it's a constant flow of what is this, as you say, expensive, or is this cheap? Is this where the buyers are happy to transact out and win the transaction, or sellers? And therefore, we constantly have the next play ready. According. So if, for example, instead of the buyers failing here and we actually won and we broke above, we would then, as you said, there would probably be a squeeze.
Yes.
How would you, let's say if that was to take place, where would you look to try and enter? Because let's say a squeeze takes place, that'd be quite aggressive, right?
Yes, it will be quite aggressive. It will be with a lot of big trades inside. I will plot my profile, search for the first low volume node, jump in with a really tight stop loss and get the explosion.
Okay, got you.
And this way you can get really fast 1 to 3, 1 to 5. If you have 5 hours for the day, you're done.
Yeah, of course.
What you need? It's a beautiful trade. And the good part is that if you take 2 stop loss, the stop loss is so small that you can afford to take 3 or 4 stop loss.
Yeah. And you, on average, what do you look to risk? Does it depend on the day or the account that you're trading?
Usually I risk 0.25% per trade because I trade personal account.
Yeah.
And in the Robbins Cup, I reach till 0.5% per trade. Sometimes when I get above 100% of return, I get to 1%.
Gotcha.
But my role is always keeping drawdown low because commission it's really heavy there.
Yes.
Like 600 execution per quarter can cost you 10-20% of their count. So it's like you don't need only to make profit, you need also to repay commission.
Yeah.
So it's just not convenient to execute. What's happening here?
We're seeing the buyers trying to break this level.
Yeah, they are getting aggressive to the eye. What does it mean? That they are willing to pay higher price for this asset.
Yeah.
So is it too expensive to buy? No, because if it was too expensive, aggressive buyers will not participate here. So it means that still my narrative is buyer. Even if I didn't break this level, I already know what to expect for the day. Already know. And we are getting ready for the squeeze. The squeeze will be present here. Look.
There you have it.
This is the squeeze. Now, what can we expect? Really fast analysis. This is the bunch of aggressive trades that are populating this movement.
Yep.
I will not plot the profile because this is all low volume node.
Yep.
They didn't transact efficiently. So the first position that you can take here is protected by this area. Okay. So if this candle closes and it's only 5 minutes, it can either give us a follow through, so break of the eye and we get a retracement, because remember we never take the first drive.
Okay, yeah.
Because it can be a fake out.
You want the confirmation.
Yeah. So it can be a fake out. It can be absorbed and snap back.
I'm getting too excited. I'm like, yeah, execution. Let's get in here. But this is why you're the professional and I'm the podcaster. But it is incredible, honestly, to see, play by play.
We can have a position here. If it breaks the law, you can get the first position of risk here, targeting a 1 to 2. So we are risking 600 to make potentially double 1,200.
Yeah.
And if we want, we can also turn if it achieves it. But our role now is to put our stop loss to risk 0 as soon as possible.
Of course, yeah.
So
this long executes if the high gets broken.
Yeah, this execution can be on buy stop. Like
buy stop, yeah.
If it breaks the high, you can be inside the position. Yeah. Now, this makes sense because we are protected by all these big orders,
Yes.
So as soon as this wick gets taken, you are just inside and you are covered here. Why? Because look what's happening here. If this... Okay, we are inside in this position. We are risking $650. If these sellers are getting aggressive and we are getting annihilated, we want to be out as soon as possible because it means we are wrong.
Yeah.
At the same time, if we see these sellers getting completely absorbed by buyers and continuing up, we can also trail the stop and we are...
If we go above, would you say that it would it cause a squeeze? Especially because of the size of...
You understood how it works. Yes.
So if we break above now, for example, and we continue higher, in terms of trailing your stop, would you be then trailing it beneath?
It's not so difficult.
It's not. Yeah. It is so interesting because as I was saying to you earlier, like I think a lot of people have a huge misconception with
order flow. They think order flow is hard.
Yeah.
Order flow is reading an alphabet. You need to learn the letters and then that's it. But it's really strange what's happening here because it's not common that you have a breakout and you don't test. They are leaving a huge low volume node. The only thing I'm afraid, because consider that we are now in the position, is that in the test of the low volume node, they will spike out. But we will take multiple position in this case.
Yeah.
So they are pushing the eye. What does it mean? If they are pushing the eye and make another drive, this big boy needs to close the position because he's losing. And if this boy needs to cover himself, the squeeze can get interesting. See, just analyzing balls, not price.
If anything, these balls look
just a game of balls.
When they start overlapping, it kind of looks like ICT's Enigma, Like,
yeah.
This is how it's really going on.
Yeah.
But
no, the algorithm is saying that we are going to get long.
Mm-hmm.
It's not order flow. It's algorithm.
It is incredible, though. Honestly.
You can only understand what is price because you watch this line. You see this.
Exactly. Exactly. It's so interesting, honestly. But I'd love to. I do wonder, what the audience are thinking at this stage. What they would feel out already and trying to revenge trade or get back in, or like what would that look like? For a lot of people, because I can imagine down there, a lot of people probably would have been shorting, expecting, you know, a follow through down. But then, yeah, especially after the gap's been filled as well, right? Because a lot of people would assume we gap filled in London, we're going to then continue lower, right? But as we can see,
But in what's good about it? What's happening? Like the sellers are getting completely destroyed, and soon we have the
this is incredible.
soon we can put the stop loss at break even.
Yeah.
We have a long way to go still.
So at this stage, would you have moved the stop loss beneath the red bubble there?
There is
or-
only one reason I will not do it,
Okay.
and I will be happy to take a stop loss if it's not back at me, because there is
That low
that
volume node.
low volume node.
Got you.
Like they can push a spike really fast, and they get liquidated in a really good position.
Got you, yeah.
Like this position, it's only one contract can give you 1,000. Look how much it's pushing.
Yeah.
Like
That makes sense, yeah.
now we enter here and we got one laser green line. You
Yeah.
cannot expect anything better as a trader,
Yeah.
because you are just psychologically, it's way better than being included in this mess. No,
Very true, yeah. Very, very true.
it's time for us to put the risk to zero. So now,
So now, even if it comes to low volume node, it's fine because you've taken
Still
zero
zero.
and you have a chance to re-enter if
You have a
necessary.
chance.
Yeah.
Now you can play this game in a lot of ways. You can scale in again.
Mm.
You can put this stop loss to break even and use this amount of profit to open another position, because you have another lock in here. What does it mean, lock in? This seems like the MasterCard logo, but it's sellers getting aggressive
Yeah.
and buyers getting more aggressive than
I'm
them.
winning.
Who is fault? You see, they are willing. Now, when I tell you, what does it mean? Buy low, sell high. If they are willing to pay a higher price to push the price down, there is no discount. There is no premium.
Yeah.
Like it's just stupid, the concept that they are trying to push to the audience, because here, the only thing the market is telling you is that buyers are willing to pay more to buy Nasdaq. That's it.
Yep.
As simple as that. You don't need 7 screen. You don't need a huge amount of tools. We are just watching the real nature of the market. Orders, not candles.
So if you were to add there, would it be a case where you want to close and then a revisit?
Yes, in this case, you will take profit because it's already like half. It's like 1 to 1.5
Yeah.
when it was here. So you can just close and use the profit to take another trade on the test.
Gotcha.
We are not doing this model because this low volume node scares me.
Yeah.
And I don't want to say I'm sure, because I hope it will go good, but I know my chicken, I know my Nasdaq, and usually at the session, it's just give the first drive,
Yep.
pull back,
Yep.
and create. But we can just, now we are, that's the reason also I got aggressive with risk zero, because we can take it another trades. Otherwise, use the profit on the first one to take another one. That will be even better. What is telling us the market now? Just analyzing raw data, the buyers at the top are not getting accepted.
Mhm.
So it's getting expensive.
Yeah.
If it gets expensive, we should start to see some sellers here.
Yeah.
And if we see sellers and they win the battle, we are fucked up. To the point that if these levels gets broken, we can also go to stopping profit of 1,000 euros.
Mhm.
Not 1,000, like 800 euros, and say, if it goes bad, we use this profit to make another trade.
Gotcha. Yeah.
But the major movement of the day, we took it in the first 20 minutes. That's the major movement of the day, the break. Then you can play it long term.
Yeah.
And if you play long term, you have 1 to 10 risk to reward, but you get a lower win rate.
Of course.
Or you can just say, give my cash, session is done.
Are you able in futures as part of this? Are you able to like partial your trades?
Of course, yes.
Yeah?
Yes.
So is that something you sometimes do? Let's say in this example, it's a good one to be fair. Would you, for example, you had multiple contracts on, and you're in this position? Would you say,
Considering that I go heavy and I go with multiple contracts, when I see this rejection, I will already take out half of the contracts.
Okay.
Because I'm risk free. Okay.
yeah, exactly, yeah,
I can take profit and I can continue to scale in if I want.
Yeah.
Okay. I don't like when the market gets weak, so I will take out here. But education wise, I want the trade to get completed. Either we are stopped out at break even, either we go to take profit. I don't want to create additional difficulty of trade management that is advanced.
Yeah, because even then with trade management, it's quite personal
It's
as
part
well.
of the, like, it's a big part of the...
But when it comes to, say, the high of previous day, is that something then, let's say you've taken half off, would that be your next sort of target? Or if, let's say, price goes to, 1 to 3 or 4 and then shows similar where we're getting a bit of weakness?
I want to know everything. Huh?
Give me all the secrets.
So the point is, when I told you I will scale out, it's exactly because when you see this, the next step is aggressive sellers.
Yeah.
So
you coded the algorithms.
the next step is aggressive sellers. Now, if aggressive sellers gets recovered,
Yeah.
this was funny. If aggressive sellers gets recovered, we should expect another explosion up, the second squeeze.
Yeah.
Okay, so let's go back to your question.
Because bearing in mind, right, each one of these is 40. You set it to 40 contracts, right?
40, but these big balls, maybe it's 100.
Exactly. That's what I was saying. Yeah, yeah.
These are big boys. Okay, so I would like these big boys to be squeezed or to get back to the low volume node.
Yeah. So, for example, we were at the high there in real time, or if we weren't in this setting, you probably would have taken half off.
Yes.
Let's say price comes back to break even on that trade, no problem. But then you're going to look at the reaction from the low volume node. Is it again a confirmation based?
Of course. Like again, if this one goes to half profit and half break even, I would use half the profit that I made to wait for the trades there, because I'm pretty sure that if we get back to the low volume node, we get aggressive buyers, we are going to run to the high. So you can trail.
Because bear in mind, where did this get to? It's got to about 800, you say? 800 euros?
Yeah, like 800, but half it's 400. Like
exactly. But now it's easy for people at home to maybe think,
this is only one contract, huh?
Exactly, yeah. That's what I was going to say. So, like, you make that 10 contracts, for example.
Yes, you get
so you would have taken 4,000.
4,000, yes.
Within the few minutes.
That's the point. The more the account size, the more you feel confident to get continuous profit for the day.
Yeah.
And then if you want to scale in, you scale in with the profit. You anticipated what I wanted to say to you.
Yeah.
Like how I did this performance in the World Trading Cup is building profit for the day, building profit for the day, building profit for the day. And in directional days, I risk, for example, in 10 trades, the profit that I made for the day.
Yeah.
And you get a huge percentage.
Of course.
But you are only risking profit of the day.
Yeah.
If the day gets close, this profit is locked in, it's equity, it's not more profit. You cannot risk it.
So the next day reset.
Yeah.
Yeah.
And if you think about what's the concept of this, when the model goes well, you take risk.
Yeah.
Because the model is respecting what you're saying. If the model goes back, ready for the squeeze, huh? Ready for the squeeze coming, huh? Sellers aggressive here, no follow through.
Yeah.
So we need this eye. If this eye gets broken, we go here.
Yeah.
Done. What was I saying? That you build your position with multiple scalps. And this means that when the market condition is favorable to you, you make a lot of money.
Yeah.
When the market condition is bad, you take the first 2 or 3 stop loss and you are out.
Done. Yeah.
One trade the next day, everything covered. Like I have a maximum stop loss for the day, like in percentage term, that is 2%. So when I say to people, this day I took 8 stop loss, I only lost 2%.
Yeah, exactly.
That's what they don't understand. They see the time, maybe they are risking 3% per stop loss. Of course, it's a lot, but that's not how you deal with risk management.
Definitely. And what's important to highlight as well, as we were talking about contracts, and if you had more contracts, this would have been X amount. What's important to highlight with that is that that's not where you start, right? You start with the micro, you build over time. And I think people hear over time and they automatically assume that's a long time, but it's all perception, right? So like if it takes you 2 to 3 to 4 years to really start to build a position size up and your confidence and your skill, isn't that worth being able to make $4,000, $5,000, $10,000 in a day, right? In a day. Yes. But then don't hear that line and think, oh, yeah, that's incredible. I can do that ASAP and whatever. It's the 3 to 5 years of dedication and hard work and really intricate detail that then allows you to have that skill set. But it's like a lot of people aren't willing to sacrifice and understand that. And as I said, this is a strategy and a playbook that is truly for actual traders, not for people who like the idea of trading, if that makes sense.
Yes, no, I totally agree with you. And also, like, I know it's easier to believe in the fairy tales of the MetaTrader bot that makes money for you when you sleep on your table when you don't do anything, but that's not the reality. And the message to you and understand if they are doing what they are saying they do.
Yeah.
Because there is a big difference between people that make money with the market and people that make money pretending to trade the market, like with service connected to them. In this case, you see they revisit again the big trades, no follow through, going back to the... So now I remove a little bit because I cannot really see price. So let's remove it. So the message I want to give to them, he didn't take out us on break-even on the second position, but we took out position here, half of the position. You see how much this level is important, and this level the market is using to pivot. This is not the case. This is when buyers decided that it was too expensive to continue buying. So this is the cap of the auction. The Mustang got too much expensive for us.
Yeah.
If they are changing their narrative, when we will see another candle, we can continue to trail our stop in profit. Like, it's not reinventing the wheel. I will keep this visual for now without big orders because otherwise I cannot see where is our break-even. And here is our premium setup. If we are willing to go back and cover the low volume node, we will use half of the profit that we made to strike up. Even with one contract, this can be a $4,000 trades if we wait for the eye.
Yeah.
But we need to stay here till evening because I think the volatility I can see it was big in the beginning, but now it's drying up. So let's see. Let's see at least if we reach the target without taking out the other position at break-even.
That other trade that we discussed in terms of outside of your playbook, and some traders might have it in their playbook. And you said that with that trade, it makes sense to target the ceiling that we had at the time.
Yes, exactly.
Because you don't know if it's going to break higher. Would it be, if someone was taking that setup, or would that be a setup you would take if you had already traded in the day, made some profits? Or even then, it would be,
Because it's not a bad setup. It's a good setup. Just
would you take the full setup out here? Or would it, if in that case you had multiple contracts, is that another one where you would say half off, leave the
I
rest?
do something really smart.
Okay.
I take the setup out here, but I'm ready to open it back with the profit I made if it breaks.
Okay, so then you're able
I
to
don't
scale.
take the risk of indecision here.
Okay, yeah.
I bring the money in my account, then I'm willing to put the money on the table if I have a confirmation. Like, it makes more sense. I tried what you say to keep it.
Yeah.
But 7 times it snap back, you get a break even, you say, fuck, I can start the day at 3R and I let the market take out everything. It's preparing the squeeze.
Yeah. So all those red orders here are right now underwater. We take that high, we should squeeze up.
You are getting good.
He's got a good teacher.
Getting prepared.
We have a great...
What can we expect? Buyers at the eye.
Yeah.
The auction got expensive now. More expensive. They are willing to pay higher price for it. So, absorbed. You can put in stop in profit if you want. I will not do it because the test here, it's really probable to happen.
Yeah.
But we took a really exponential move, you see. Almost zero drawdown.
Yeah.
Like from when we entered, there was zero to non-drawdown. Like we enter in this candle, it continued. Again, seller trying to step in a parabolic move.
In this particular here now, is this now the level we would hold?
Yes.
Yeah.
This, if you want to be conservative,
down there,
down there, because this is the protection level of the sellers. Why we saw this exponential move? Even someone will think we are expensive. Why? Because these sellers are closing position, and this creating even more momentum. Now again, same situation. Sellers aggressive. Buyers that needs to decide if they want to protect this level and continue to be aggressive here. Now we are reaching 22 round number.
Yes.
This is a really important number. Price will accumulate or distribute around this level. So you can also decide to, if it breaks this high, with aggression, you can also take the second position with a really tight stop loss. So if it goes bad, you take another $600 or $700, but at least you are protecting yourself. So if we tap this high, the stop loss goes here.
Yeah. So our stop loss.
Our
for this
stop loss
trade.
goes here.
Okay.
So we make more than the first position, but still we are protected.
Yes.
And then someone can say, what if it tests and then goes up? Okay, we are protected on the second one. It's another $700 here. Because if this high doesn't hold and the market collapse, I don't want to give back to the market all the profit that we made. We made an amazing zero drawdown entry here.
Because this is in consideration that's our target. So then it's a negative risk to reward to allow it to go back.
Exactly. I'm not willing to give to the market all this money back.
Yeah.
And see, our sellers are starting to participate on the top. I don't like it. I expect a squeeze that will bring us to target, but if this level gets broken, I have too much profit to give back to the market. It's not worth for me. So our stop loss now, I will show you this low.
Yeah.
Okay. And I can see that it's not easy to break this high because you have to consider that it's a round number. Buyers are getting aggressive again, buying the top. If this auction fail, I think we will revisit the low volume node.
All the way, yeah?
Yeah, all the way. So we can have another position we made 400 on the first, 700 or 600 on the second. We are floating out.
Yep.
Totally out on the position. Let's remove everything.
It's important to highlight as well. So at this point, maybe roughly $1,000, $1,100 in total profits.
Yeah.
And bear in mind, because I think social media causes a slight problem in the trading space where they think 1,100 is not a lot of money. Bear in mind, that's 1,100 in roughly about half an hour.
With one contract.
With one contract. But not even just that, though. Even $1,100 in a single day is incredible. Because if you're trading for a month and on average you, whatever, 50% win rate, whatever it may be, you're still coming out with a very good yearly salary in a month almost.
Yes.
Right? And that's incredible. And that's like position number one. That's like, as you scale in your trading journey, I know it's so easy with social media to assume you need to be making $100,000 a month, every single month, or multiple hundreds of thousands. And that is possible, right? And there are traders doing that, but they didn't start that way. They go through the process step by step.
Look at the precision of the reversal point. Yep. We saved all this money that the market want to get back. Like from here, I want to show you something. And I will make another prediction that is not a trade, but is where the market will reverse. This delta from here to here, it's not worth the trade.
Yeah.
Because here it's full of big trades, not having a follow-up. I expect that from here, we get all the way back from here. And we can use these two $500 trades to make another 1 to 3. Now, let's say if we take another 2 trades for the day, 1 to 3, $500 is another $3,000. Only using the profit. Worst case scenario, we close break even for
the day. Yeah.
Like, the reason traders are unprofitable is they try to get the home run. So maybe they get this breakout and they all till the top without taking partial, you can never go broke by taking partial.
Yeah.
Like you are sitting on profit for the day.
And in this case as well, like there's nothing in between that you would look for. You would only wait for price to come back to that higher probable area.
Let's see. I will exactly tell you where I expect a reaction. Considering that still the momentum buy, I didn't saw the big picture, but the momentum buy is amazing. But let's get the whole picture.
It's incredible though, because it shows you when you're dissecting price, when you're logged in.
I lose the conception of time. Really.
Yeah.
I was thinking that it was 20 minutes that we have to.
It did feel, to be fair to you, it did feel like that. Yeah.
This is a huge volume, huge low volume node.
Yeah, you can see.
Like it's a squeeze.
It's very clear, yeah.
So I will not engage in other trades here.
Yep.
Just the first trade that I will watch is here. But watching the momentum, I don't think we will go back. So you can just continue to adapt to the position using the profit. If you want, we can continue to see it. You can go on 1 minute and see what big boys are doing. So my take, and this is against the probability, is that this is a wall.
Okay.
Okay. So this is the trade that you never need to do. But if I need to consider a trade, this is what I'm afraid about. Okay.
Of that happening.
This is the reason I took out the buy position before.
Gotcha.
Round number, seller getting aggressive, buyers not having a follow through.
Was there any of this slowdown as well? Take that into account as well?
Yes,
Yeah.
because this one, it's compression again.
Okay.
The market getting back inside compression, usually it's a revisit of the low.
Okay.
Now, let's see what cumulative volume delta is saying. This is important information that we are putting in for the first time here.
Mm-hmm.
And this, the cumulative volume pressure of the market, visualizing candlestick. You see that it's short.
Down here, yeah.
This is an information because the squeeze was supported. But then we started to distribute.
Yes.
Again, all this buy movement, no follow-up.
Yeah. Divergence.
This divergence is significant because it means that there is something big here. So, two scenario. Either it breaks and we take another continuation trades, that is amazing for us. But I know this asset and I think that we are going to revisit from here, either this low or this low volume node, then we take even better trades.
Yeah.
This is a pattern that I have seen a lot of times. 4 consecutive weeks, every week taking out the high but not creating new value. If there is a big buy trades here, a collapse is soon. Of course, it's not a trade because we are counter trend on it. Let's see if there was one.
Doesn't get old, I'll tell you that. It doesn't get old.
Yes, it's this one. Big trades, no follow through.
Yeah.
Sellers building the narrative, cumulative volume delta going down. Here we go.
Would you say, do you only trade NASDAQ NQ?
NASDAQ because it's a lot of information to deal with.
Yeah.
I tried one time with NASDAQ and crude oil, but I need a therapist.
Yeah.
I need a psychologist at the end of the...
But would you say that also, though, even though, yes, it's a lot of information, by really tuning into one asset, such as NQ?
Yeah, it's the cheat code.
Yeah.
Like understanding...
Because like you just said, I know this pair.
This was feeling. Like this one is the intuition part.
Yeah.
It's a counter trend trades. I will never take it, but we took from the bottom to the high and we exit at the top.
Yep.
We saved the delta profit that was here. That if I was using my ego, I will say, no, we go to target.
Yeah.
Because this is my target. But this capacity to adapt to market behavior. Look here, in this amount of error, we took an explosion that is 5 times more. It's not easy to time the market in this way. If these big trades protect and break the high, we have another buy.
Mm-hmm.
So we can again jump on the train.
And the problem with if you're trying to say long and then short is that the real bias is still long. But let's say if this comes up now and you get break even or stop loss,
yes,
a lot of people's psychology is that they will still focus on the short because that's the one they lost.
Yes.
Instead of realizing where the original bias is by taking this low quality setup. It's like, yeah, okay, might pull through, might be able to make some good profit from whatever it may be. The problem is our mindsets get fixed on that bias then. And that happens to a lot of people. I think a lot of people, let's say coming into this session, as a good example, coming into this session, they did the same market analysis you did, long bias.
Mm-hmm.
Price shot down. They switch to short, they take a loss.
Yes.
But then the problem is they don't switch back or recognize their mistake and they stick on the loss and they stick on the short and they keep trying to short all the way up.
They marry their trades.
And then they end up in, blowing their challenge, blowing their account, taking a heavier loss than they're meant to. When in reality, they had to, you've done it's like you said earlier, right? Mm-hmm. When you're at war, you don't make the changes, right?
You don't make change when you are fighting.
Yeah.
The changes are made in the tent with generals and planning the war up front.
Mm-hmm.
In this case, it's building a good buy setup.
Yeah.
Huge amount of buy here. Watching the narrative here, I don't think we will retrace bet. Look where it tapped in. Low volume node. Now what we need to be back in the trade? We need a breakout of this high.
Yep.
So The
Would it be
next
a
setup.
buy stop.
No, I want full candle close.
Okay.
On this one. So risking.
What's the reason for that one? Because we're already quite high.
Because the bias is clear.
Yep.
The bias is clear. The target is still not taken. The momentum is big and the interesting is big. Like
Okay.
this candle, this big order is bigger than all this area.
Okay.
These traders are getting squeezed.
Mhm.
So if we break this high, we test this area, I will target for another $102,000 trade, get into 22,062. This will be the trade. But you see how much fast you need to put your ego aside and say, this was the narrative that I was building. It didn't break the high, but it broke the low.
Yeah.
So it can be still a retracement to the low volume node. You know, what I need, the trade is valid as soon as we close with a 1 minute candle, full body candle above this.
Where we were failing.
Yeah, where we were failing. Even better, if in the move up there is a big trade cell that gets destroyed, like here. Let's see.
And how long have you been trading this way?
This way, it's around 4 years that I use order flow more than price action. Before 4 years, I started to get only the trigger from order flow. Now I'm full order flow. Like I use price action only as a proxy and a result of volume.
Yeah.
Like you see, I always compare the volume with the result that is providing. And but the learning curve is still like 20% of what you can understand with this. So I still am 20% of the real power of order flow I mastered. Like I still need to get better sometimes, because I think there are, especially nowadays, and I think in the era of artificial intelligence, understanding deeply this data and using AI to just get a better risk management or position management, journaling all your trades. This is an idea for Umar. Like using artificial intelligence for the journal is something that can really step up the game a lot. And it's incredible how much, when you have 2,500 sample, also a small change in risk management change the curve of the equity line.
Yeah.
Like you can go parabolic, or you can go stable, or you can go like this. Small change. So the strategy is 30%. Let's say 33%. 33% is the mindset, the trader that is behind, and that it can stay calm when it's not his setup or playbook presenting.
Yeah.
The other 33% is the risk management part.
Definitely.
It's a huge part.
Definitely, yeah. That's something that I did a roundtable with verified 7 and 8 figure traders. Zuma was there as well. And that was one thing that seemed to stand out, is that once traders had gotten the strategy down, right, had their playbook, and then they have the psychology at this point, they have consistency, a huge portion of that change in P&L is tweaking the risk management, like really mastering and focusing on that.
Totally.
So what are you seeing here then? So at this stage, obviously we've seen this big buyer.
We are still in a buy narrative.
Is that setup that you have mapped out there still valid?
The sell?
The buy, sorry.
The buy is still valid, yes, totally. And it's still not activated because they need to break the high.
Exactly, yeah.
But it's valid. The narrative is valid. I was interested in this buy. If it gets broken and tested, we will keep this narrative.
Yep.
But still,
all right, there is 1 minute till market close. We are looking at now a service. I was expecting a pop right after market closes. It dips even more. What a shame. Let's look at Oracle. Oracle. How to do today, Oracle? I was not expecting such a big rise. Oh, and a dip. It climbed way up and dipped. I was thinking about buying puts here, but I had my money tied up in now service. All good. Now we are really wondering what happened with Hood. Probably a big dip. It's a Friday, sell-off day. Lots of stuff being sold off. Just as I thought. The entire rest of the day. When did it start selling off, you say? 10:30? 10:30, 10. Yep, right after, let's say 10:15. Around 10:30. Start selling off. Puts on everything in the world after 10:30. Same with Oracle. Let me see. Yep. After 10:30, everything went to crap. We're going to write that in our journal. After 10:30 a.m. on Friday, everything goes to crap. Puts on everything in the world after 10:30 a.m. on. Now look, we may have lost $170 today, but we learned something valuable. That after 10:30 on a Friday, the world goes to crap. Let's see how Netflix did after 10:30. Enter. Not too bad, not too bad. This 10:30, we did see a dip, but surprisingly, not too bad. It did fall after 10:30, but then it picked back up. See, look, 10:30. No, we're trying to justify. We shouldn't do that. Now, Netflix was an anomaly today. Look, this. How often does Netflix go up? Like, does not make sense. Today was an anomaly for Netflix. Let's see how Tesla did at 10:30. Right here. Yep, look at that. After 10:30, going down like even before then, since it's actually gone down all day. Just it is what it is. How did Microsoft do? Oh man, nobody wants to watch. It's fine. They ask how I'm doing. It's like, just go on my live. You'll see how I'm doing. Ask how I'm doing. It's like, just go on my live. You'll see how I'm doing. super soft dip. Oh my god, it's a good time to buy. It's a good time to buy.